US will face a traditional trade-off between inflation and unemployment.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
And Goolsby says there's still some supply chain benefit coming ahead.
Every Friday, right here on Bloomberg. Context changes everything.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ holding in the red. We're off session lows. But this morning, what a glitch. The world's biggest stock market hit by a pricing glitch in a session that is currently seeing equities fall and bonds rise after economic data this morning signaled a slowdown in momentum. Traders reported issues with live pricing for the S&P 500 index and the Dow for about an hour and 20 minutes. It was all resolved by noon Wall Street time. Here's where we stand. S&P right now lower by 8 points, a drop of 0.2%. We've got the Dow down 270 now, a decline of 0.7%. NASDAQ, the composite index, down 59, a drop there of 0.4%. 10-year 4.54% with a 2-year that's yielding 4.92%. Spot gold up 0.2%, 23.44 the ounce, and West Texas Intermediate crude down 1.9%, 77.70 for a barrel of WTI. Lots of retail earnings today, among them Kohl's. That stock now plunging 23.5%. The department store chain slashed its guidance for the full year. Best Buy, though, heading the other direction, up 12.5% after reporting better than expected profitability. Also lower today, we've got Dollar General down now by 6%. Again, recapping, stocks lower. S&P 500 index down now by 8, a drop of 0.1%. Balance of power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie, thank you so much. Charlie Pellet keeping an eye on the markets for us here on the fastest show in politics. Thanks for being with us on Bloomberg TV and radio. I'm Joe Matthew alongside Kaylee Lyons in Washington. We hear so much about utilities lately, even in Charlie Pellet's stock market report. Kaylee, the drive to harness more power in this country is a very real one. And as we head into another long, hot summer, there are a lot of questions about the resiliency of our grid, not to mention the ability to update the grid, upgrade, if I can say, the grid to handle this new wave of demand from AI.
Yeah, you need energy more than ever. The problem is, especially with the various supply forces that can go into providing energy to the country, you sometimes have intermittency issues.
That's for sure.
And storage issues and the like, and hence why we have seen across a number of states throughout the country in recent years issues with the grid actually being able to keep up with the demand for energy that is out there, whether it's too cold or too hot. Too hot, though, is usually what we consider as we enter into the summer months. And we want to have this conversation now with Elliot Mainzer. He is California's Independent System Operator CEO, and he's joining us here in our Washington, D.C. studio. Welcome to Washington, Elliot. Thank you so much for being with us. As we head into this summer and consider what California may be in for specifically, how concerned are you about the stability of the grid and whether or not we may see things like blackouts in summer 2024?
You know, thanks for asking. We're feeling pretty good about this summer. This last several years, just since 2020, we've put over 15,500 megawatts of new generating resources onto the system, including what is now the nation's largest fleet of lithium-ion batteries, over 8,500 megawatts of batteries. So we're now using that dispatchable capability combined with what is a pretty good water year for California and expected reasonable load conditions, and we're looking pretty good. Obviously, we know that we're exposed to a west-wide heat dome or other extreme events like wildfires, but generally we're feeling guardedly optimistic about this summer.
It sounds like battery power is a big part of the solution here to fill in the gaps. To what extent is solar also helping you?
Well, solar is one of the principal developing resources in California. We're now up to about 19,000 megawatts. That's a lot of solar. And the pairing of the batteries with the solar has really been critical. You know, get into the evening when it's still really hot and the solar energy is coming off the system. That's when those batteries come online and ramp into the system.
So when Donald Trump gets to this in his stump speech, and I'm not going to pull you into politics here, but he's speaking very specifically about this. He says when the sun goes out on a cloudy day, you can't watch TV. Tell your wife you're not watching TV tonight. That's the point of the battery, correct?
Absolutely. And look, in the utility sector, you have to look at everything as a portfolio, right? No single resource can keep the lights on by itself, right? So you have to pair the batteries and the wind with storage. With hydro, we still use natural gas in California. It's part of the equation during the transition. So you have to think of a combined portfolio that can provide both the energy and that capacity, that reliability, dispatchability under all conditions.
Okay, so if you need the portfolio, is the portfolio currently big enough considering the demand is only going higher, be it to power things like artificial intelligence or a changing climate that people are adapting to, or do other things need to be added to the portfolio?
No, it's exactly right. So a big part of our responsibility at the ISO is to be looking out over the next 5, 10, 15, 20 years and trying to anticipate the changes that are coming. We do that through transmission planning. We work very carefully with the state agencies who do the load forecasting and the integrated resource planning. And probably one of our single biggest responsibilities, and something that's obviously a real hot topic here in Washington, is transmission. And making sure that we're doing the planning and then eventually the constructing of the new transmission so we can onboard the resources to provide reliability and affordability and economic efficiency, right? So transmission planning and then efficiently bringing these resources into the system is one of our principal responsibilities. We take that very seriously.
I want to get a finer point on the new demand from AI, because this is a huge story that we're following, and I bet it's a big part of your life all of a sudden. The Electric Power Research Institute was out with new numbers this morning. Fascinating to see these regional pockets. Overall, the digital hubs where we see lots of data centers are pulling as much as 9% of U.S. electricity and will by the year 2030. That's up from 4% last year. But the state-by-state graphics here that we're looking at show about 15 states occupy 80% of that total.
Yeah.
Where does California fall in that?
You know, California will probably be in I would say in the middle. Maybe it's hard to tell exactly. I think the bottom line is
it growing so fast you don't know?
No. What we're trying to do, as a matter of fact, just literally the week before last, sat down full day working session with the industry, with some of the big tech developers, trying to figure out where are these going to be located, what's the scale, what's the size, what flexibility will they have on the system, what will be their infrastructure requirements. So I would say this topic is hot right now for good reason. Industry collectively is leaning in, trying to figure out what its implications are, where the resources will be distributed, in which states, in which parts of the country, and then
Bed Scoresby says the strongest part of the economy right now is the job market.
I would imagine there is something of a lagged effect, though, in making sure that infrastructure is in place versus the demand suddenly being there. Does demand going upward significantly in this specific area? I mean, it has to go down in other places, like residential conservation needs to be potentially more serious.
So there's a couple nuances to the question. First of all, I would say it's also incumbent on the technology industry and to be working closely with the utility industry and the grid operators so we can anticipate their needs. I think you're seeing better coordination, but that planning coordination, that partnership, honestly, is going to be essential. They're going to be grid citizens. They're going to have big impacts on the grid. We need to work with them to anticipate their needs. The second of all, it can't be coming, one new source of load means somebody else has to come off the system. We're going to have to deal with residential, commercial, industrial, and new sectors coming on the system. Now, that means there's going to be real growth. We also want to make sure that consumers can provide some flexibility to the system, particularly under extreme circumstances. So all of these things have to be thought about and planned for in a comprehensive whole. But you need to do long-term planning to anticipate these needs, because as you know, you can't just turn on and flip the switch and have a new piece of transmission built in 24 hours, right?
I understand you're an accomplished jazz saxophone player. That says to me you know how to ad-lib. How much of this is jazz improv, figuring this out as we go?
Well, I would say, put it this way, I think we know the general rhythm and the chord changes. Okay.
You know what key we're
we know what key we're playing. I think we're trying to figure out just exactly what the scale of this issue is going to be. Okay. I think folks are really thinking hard now. We know that the laws of economics kick in, right? When you have scarcity, prices respond, supply responds, demand responds. I think we're trying to get a sense of just how big is the scale of this demand on the system, and what can the industry do to bring some flexibility to the equation? How do we spatially locate these resources, and how do we put them in places where the costs of bringing the additional infrastructure are not so high that we have ratepayer revolts, right? That's going to be affordability is going to be a real consideration here.
Coltrane or Sonny Rollins guy?
I wouldn't be willing to pick between the two.
All right.
Both. I'm going to go with both.
Glad we met you, Elliot. Thank you for coming to see us today.
Absolutely my pleasure. Thanks for having
Elliot
me.
Mainzer,
Good. Thank you.
Runs the California Independent System Operator, essentially the grid in the great state of California, Kaylee. This is Balance of Power on Bloomberg TV and radio. That was a pleasure to stop down for 1 minute and talk about something that did not include Donald Trump's trial in New York, but we do have eyes on it as we anticipate a verdict at any time.
Yeah, the jury is deliberating as we speak. Of course, this is just one of the 4 criminal cases that Donald Trump has been dealing with. The difference is this is the only one that made it to trial and the only one that may do so before the election, because in the others, we're still dealing with questions like presidential immunity.
Exactly. Presidential powers. This is where Saleha Mosin comes in. They've actually tackled this topic on the new Big Take DC podcast, and Saleha is with us now in Washington. I have to ask you first, Saleha, your thoughts on what we're seeing in New York. The political implications are probably going to be massive, but they are unquantifiable right now. How are you looking at this?
I'm trying to take it one step at a time, Joe. I think what a lot of people forget is that once we have a verdict and a possible maybe a sentencing, that means that we will have a candidate, a Republican candidate, who is no longer spending every day in a Manhattan courtroom, and he will be ready to hit the campaign trail and prepare for the first presidential debate of the cycle, which is in just a couple of weeks.
Yeah, it's remarkable. Time is moving so quickly and yet so slowly, as we are in the longest general election cycle ever, and it feels like it has lasted forever, but also it's only just beginning and so well underway. It does, though, when we consider the office that these two people are vying for, Donald Trump and Joe Biden, both of whom have held this office before, what actually comes with the office and where their authority begins and where it actually ends, Saleha? I know that's the questions you're digging into this week. When we think about it strictly constitutionally, where do those powers end?
There's so much power, Kaylee. I talked to Professor Dan Farber. He is a constitutional expert, and we talked about what it was that our nation's founding fathers had in mind when they were designing the government and trying to decide how much power a president should have. Have a listen to a part of the interview that I want you guys to listen to from the episode from Dan Farber.
I don't think the Constitution alone can do anything, in a sense, right? I mean, it's a piece of paper. The Constitution has meaning to the extent that the courts enforce it and that people believe in the Constitution and stand behind the courts. The power is power that comes from belief and faith in the rule of law.
That is probably one of the more surprising parts of my interview with him, to hear that the Constitution is just a piece of paper and that it is up to the electorate and up to the courts to uphold and kind of maintain the boundaries of presidential authority.
That sounds pretty abstract, and I wonder how you play that against
Ed
the
Scoresby
backdrop
says
of
productivity
this
is a
Donald
noisy
Trump
series.
presidential
We've got to
immunity
keep
case.
an
We're
eye on
waiting
it.
to hear from the Supreme Court on this. Saleha, it'll probably come next month is our expectation, but that's going to tell us a lot about the extent of these powers, isn't it?
Absolutely. What we're seeing is that we have a Supreme Court that doesn't always necessarily reflect the zeitgeist, the will of the people. I think there's a lot of diversity in how people feel about different key issues. We saw a lot of that shake out with abortion policy, and we're seeing that to continue to fall out, reverberate, and influence the presidential election cycle. I think the case of the presidential immunity that Trump and his lawyers have asked the courts to consider is also, like you're saying, going to reveal whether we get to a point of presidential succession and wondering that if the 22nd Amendment is enough to say, hey, a president's term is capped at 2 terms 4 years each. Is it enough? And it sounds like it needs to be upheld not just by the piece of paper, but also the will of the people and their interest and ability to
But Scoresby
uphold
says
that piece of
housing
paper.
inflation is still well elevated compared to
when we think
pre-COVID
about the
levels,
Supreme Court
and it will be
delay, it's
hard
worth
to get to
pointing out
2%
that
unless
within
that
just the last
changes.
24 hours, Justice Samuel Alito has said he will not be recusing himself from any cases involving Donald Trump or January 6th, despite the controversy around January 6th related flags that were flying outside his home in years past. The events of January 6th, other than it being a riot at the Capitol, which we all know was actually a disruption of the process required to allow Joe Biden to take the presidency. How does January 6th factor into the questions we now have about the way this process works?
This is really feeding into how the electorate is feeling. Actually, one of the latest Bloomberg Morning Consult polls has shown that most swing state voters fear violence at the time of the election in November. And of course, that has to do with the fact that the last time we had an election, a couple of months later, between November and January, first week of January, we had violence as the Congress was trying to essentially ratify the course of succession in the White House. And so there is that concern. Yeah. Bloomberg Businessweek has also reported that there are Republican and Democratic strategists and focus groups that are also finding that there is confusion around what could happen with succession.
Yeah. All right. Well, because there's confusion, all the more reason to listen to the Big Take DC podcast this week. Saleha Mohsen, of course, is the host of it, Bloomberg senior Washington correspondent. You can get that wherever you download your podcasts, and you can download Balance of Power too. Well, you're at it. Joe and I will be back later on today on Bloomberg.
The biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? It's just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
We'll have to build a portfolio of interventions. Lifestyle will also play into for some of them, and I think we can help many patients get down to a weight that they can maintain and live the life they want to live and avoid many comorbidities for the healthcare systems.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week. I'm Carol Masser along with Tim Stenivek. If you're seeing some odd trading charts today, well, you're not going crazy. That is because we know stock trading was halted earlier for more than an hour. We saw stock and Dow trading back up around 2 hours ago. So a little bit of an interesting day, a little bit of a quirky day. I keep looking at my Bloomberg and seeing these charts where it's like, boom,
well,
straight
the NASDAQ
line.
was fine. It was the Dow and the S&P 500 that weren't getting live pricing for over an hour. So it doesn't happen every day, but that's a little weird.
Keeps us all on our toes. All right, that is kind of our setup. We're going to get into the trade in just a moment, but our focus on this Friday's eve, slower U.S. growth, economic growth, softer consumer data as well, ahead of the Fed's inflation print tomorrow. That's an important metric, if you will. We're going to get into eco in just a moment with our own Mike McKee.
Plus, we go to Lower Manhattan for the latest from the jury deliberations in the criminal hush money case of former President Donald Trump.
Yeah, and speaking of the former president, our spotlight today is on why the 2024 election will not be up to the same voters who might choose the former president, not the former president, but maybe even the current president. It's going to be different this time around. We're going to get into the details.
Also ahead, why the UK's richest plumber regrets selling his business to a KKR.
Gotta love this story. We've been talking about it a bunch today. And making $500,000 a year at Walmart. One more thing that's coming up. First up, though, let's get to the trade and your top business stories. Here is Charlie Pellet.
Thank you very much indeed. Lots of moving parts. Do want to begin with a developing story right now. Paramount Global shares higher after the Wall Street Journal reported that Skydance Media has submitted a sweetened offer for a merger with Paramount. Paramount shares are up now by 1.8%. Paramount, by the way, the parent of CBS, MTV, and Comedy Central. Paramount shares right now up by 1.7%. The world's biggest stock market hit by a pricing glitch this morning that saw a session with equities falling, bonds rising after economic data signaled a slowdown in momentum. Our Michael McKee will have more on the economic data coming up in just a moment. S&P right now down 11 to 52.55. That is a drop of 0.2%. Dow Industrials finally up and running shortly before noon New York time. Down 271 right now, drop of 0.7%. NASDAQ down by 0.4%. 10-year 4.54%. The 2-year 4.92%. West Texas Intermediate crude oil down 1.9%. Gold up now by 0.3%. Salesforce.com after earnings plunging the most in almost 16 years after the software maker projected the slowest quarterly sales growth in its history. Salesforce down now by 21.4%. HP Inc. out with earnings last night, up now by 18%. And C3 AI shares are rallying after the software company gave a stronger than expected annual sales forecast. C3 AI up now by about 20.5%. So again, recapping, a move lower for the Dow, the S&P, NASDAQ, 10-point drop right now in the S&P, down 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, much appreciated, Charlie Pellet. Well, some U.S. economic data today. You probably know it. It came out earlier this morning. Gross domestic product rose 1.3% at an annualized rate in the first 3 months of the year, below the previous estimate of 1.6%. The economy's main growth engine, personal spending, well, that advanced 2% versus the previous estimate, Tim, of 2.5%.
Okay, on the inflation front, the personal consumption expenditures price index rose at a 3.3% annualized rate in the first quarter, slightly down from the initial projection. We saw U.S. Treasuries move lower on that. That's not all in terms of economic data.
We got weekly jobless claims as well, ticking up at the end of May, though the level remains low. So let's put it into context. Actually, let's let Michael McKee put it into context for us. He's our international economics and policy correspondent back in studio with us. All right, so the economy growing at a bit of a slower pace. Primarily, it seemed like softer consumer spending on goods. So is the takeaway that consumer spending slowing down or what?
The takeaway is that consumer spending was a little bit slower in the first quarter. But remember, first quarter ended in March.
That's a good point.
So this is not contemporaneous information. And what we have seen so far is a bit of a pickup from that level in consumer spending. So we'll see what the second quarter data look like in another month.
Yeah.
But right now, it doesn't tell us a whole lot more than we already knew. Consumer spending dropped a little bit, business spending picked up a little bit, and then we saw a bigger trade deficit and smaller inventory building. And those were the two things that really contributed to the lower GDP. And that was the original, when it was initially released, that was the original story. So it doesn't change that story, and it doesn't really tell the Fed that the economy's in trouble. You take out inventories and trade, and you have what they call real final sales to domestic purchasers, and that came in at 2.8 from 3.1, 2.8, still a strong growth rate.
Okay.
But does it show any sort of sense of normalization here? Like the idea that we are getting back to something that's more quote unquote normal post pandemic?
It's definitely in the camp of more sustainable. It's still, 1.3 is lower than the Fed would like it to be, but if they could get it a couple of tenths higher, that would be fine, but you get these variations. What has been interesting is we've seen this debate pick up over what the neutral rate of interest is.
I feel like Fed speakers are talking a lot more about
what
this.
level of interest rates are needed to slow the economy, and that depends on the economy's growth rate. And so the feeling is maybe growth is a little bit stronger than it has been historically, and then we can get into the nerd talk of R-star and things like that. But basically, that's been the discussion, and some members of the Fed, as you just mentioned, Carol, have been suggesting that, yeah, maybe it is a little bit faster. And then Bill Dudley, who was a member of the Fed, former New York Fed Bank president, wrote in a Bloomberg opinion column today that he thinks the R-star neutral rate is significantly higher. And that means the Fed is not tight enough and may need to consider raising rates.
Okay. We're going to talk a little bit more about, another Fed speaker, of course, Dudley, former Fed, but we're going to talk about John Williams, the current president of the New York Fed, in just a moment. But weekly jobless claims, that is more current data. Mm-hmm. Shows what? The labor market's still strong-ish?
Labor market is still strong-ish. The Beige Book came out earlier this week, and anecdotally, companies say they are slowing their hiring, and it's getting a little harder to find people, and the employees no longer have this big wage advantage that they need to be paid a lot more in order to get them to come on. But it's not suggesting that there's any kind of firing going on. So the economy not falling off because of that.
Well, Carol promised we'd talk about Federal Reserve Bank of New York President John Williams, because he said that he expects inflation to continue falling in the second half of the year. Elevated borrowing costs are restraining the economy is something else that he said. Anything new in his comments today?
Nothing new, and if you parse his commentary, it's always very interesting because he sort of tells you what he's thinking without giving you a lot of specifics. Inflation's going to keep coming down. How much and when? The economy is growing
Details.
How much? He leaves that part out so that he's not too much on the record one way or another. He's the guy, along with the late Thomas Laubach, who came up with the best guess so far of how you measure R-star and the neutral rate, and it hasn't worked really since the pandemic. And there was when he did an interview with us about a month ago, he said he was beginning to think that it had gone up, as people are saying, but he didn't know by how much. And so there was some interest today in whether he would talk about that. And he did a little bit. He said you can't just look at the interest rate. You have to look, because the economy is so complex that maybe it is a little bit higher, but that's not what's causing what's going on in the economy, et cetera. Basically, he said the bottom line is we have ample anecdotal evidence that our policy is tight enough. Now, he didn't say that. He didn't add, that doesn't mean we need to raise rates.
Right.
He just left that part out, but you can read into it.
All right, well, on to the Fed's inflation gauge tomorrow. Mike, thank you so much. Really appreciate it. Bloomberg News international economics and policy correspondent Michael McKee. All right, that's what's happening, Tim, in our economic arena. Let's get to the courts in downtown Manhattan.
The New York jury that will decide Donald Trump's fate began its second day of deliberations today by listening again to testimony about how the National Enquirer publisher took a negative story about Trump off the market. Among other things, Carol, jurors must agree unanimously that Trump intended to promote his election in 2016 by any one of three, quote, unlawful means.
Yeah, there's a lot going on. 34 counts all that jurors must deliberate about. Monitoring it for us, Bloomberg News correspondent David Gora and host of Bloomberg's The Big Take podcast. David, downtown outside New York Supreme Court, also tracking the trial is our own Bloomberg News legal analyst and host of Bloomberg Law, June Grosso. We're going to start, though, David, with you. Jury is deliberating. Where are we? What do we know about the deliberations today? And give us, first up, the picture downtown. Is it kind of quiet?
It is pretty quiet. It's lunchtime. The jury's finishing up their lunch. The courtroom is going to reopen at 2:15. So they may or may not have been deliberating during lunch. We have just limited visibility into sort of what's happening inside that jury room, of course. But the day got off to a pretty slow start. There were some notes yesterday from the jury to the judge asking to revisit some testimony that happened during the trial that centered on a meeting that took place in 2015 in Trump Tower among Donald Trump, Michael Cohen, and David Pecker, who is then the publisher of National Enquirer. There was some haggling over that yesterday into this morning. Ultimately, court reporters read out a lot of those transcripts to the jury. They were able to sort of rehear what had transpired in the courtroom a couple of weeks ago. And they also asked the judge to revisit the charging document. This is about 55 pages in length, and the judge went through a lot of what he went through yesterday. He read about 30 pages of that document aloud, once again, giving the jury some indication of what the law says that they're going to be wrestling with. You ask about what it's like downtown. I know noted cyclist Tim Stenovic would want to know if the bike lane next to me is open. In fact, it is. Cyclists are coming by. Cars are coming by. The city is not shut down, as the former president is fond of saying. And to my left in the park, kind of in front of the courthouse, there are protesters. There are supporters of the former president. They're kind of cordoned off and in separate spaces. A ton of media like myself here as well. So not tense by any means, crowded with the groups that I just mentioned, but fairly quiet as we're all left kind of wondering what's happening inside the courtroom behind me, Carol.
First off, David, really appreciate the bike lane update. That's some information I'll use later today on my commute home. I do want to know, though, about what all of this means for the deliberations, because let's be honest, we really can't read into anything with regard to what questions are asked of the judge, what is requested, what information, what testimony is requested. It's pretty much impossible to read into that in terms of any sort of conclusion.
So you look at how the two sides kind of determined their closing statements, their summations, and what the defense really tried to do was say this is a documents case, focus on the documents themselves. They tried to cast a lot of doubt on several of these witnesses as well. But what the prosecution did was said, look at this in kind of a grander arc going back to 2015. So again, far be it from me or for you or for any of us to sort of read into what the jury's thinking at this point, but it is an indication that they are interested in the events that precipitated the agreement that's at the center of this, that sort of hush money agreement that was hatched between National Enquirer, former president, and many of his associates, effectively buying stories to keep them out of the press. And so you look back at the testimony that they revisited today, a lot of that had to do, according to David Pecker, with the National Enquirer's efforts to elevate positive stories about then-candidate Trump and to suppress ones that were negative. He said, according to his recollection of those events, we at National Enquirer will be the eyes and ears for you, kind of looking at press as it all unfolds in advance of that campaign. Looking at other testimony they reviewed today from Michael Cohen, the president's former lawyer and fixer, he called that a brilliant strategy. So he endorsed what was happening there. So if anything, you can kind of just look at it as the jury being interested in the longer arc of the story here.
All right. David, thank you so much. Bloomberg News correspondent David Gora outside New York Supreme Court in Lower Manhattan. Now let's head to Bloomberg News legal analyst and host of Bloomberg Law weeknights at 6 p.m. on Bloomberg Radio, June Grosso here in studio. June, what exactly is going on? I mean, they're still in lunch, but when they are in the jury room, the deliberations, the process of going through each of these 34 counts, what's going on? And tell us a little bit about this process and what is kind of the responsibility of jurors here.
I believe they're in the jury room even eating lunch, because once you start deliberating, the court brings in lunch for you, so you don't have to leave the jury room. And they want the jurors only to be talking about the case when they're together. They don't want, as the judge will tell the jurors and did, don't go off. You can't talk to people about the case. You have to be all together because they want that input. So what's happening, it's different with different juries. What normally happens is toward the beginning of the deliberations, the jurors will just take a quick vote to see the jury for person will take a quick vote to see where the jurors stand. So in this case, I take it that the vote was not unanimous, or we wouldn't be at this point where we're reading back testimony. Another thing this signals is just confusion with the jury instructions, because normally you don't hear a jury asking for jury instructions the next day, about 12 hours after they just heard them. They wanted to hear the instructions again. And that's because these instructions are complicated not as far as the boilerplate. I mean, much of this is what's reasonable doubt, you know, how you should accomplish testimony. That's in the New York law. But the rest of it, as far as this particular charge, the charge of falsifying business records, it's sort of like almost a three-part determination. First, you have to find that he caused the falsification of business records with the intent to commit another crime, that crime being New York State election law violation, which makes it a crime to conspire to change the results of an election, and then by unlawful means. And then you have to find the unlawful means. The first two are unanimous. The jury has to be unanimous. But the unlawful means, they don't have to be unanimous. And they can find by falsifying the business records, by violating New York tax law, or I'm trying to think of what the third one is. I'm trying to.
But they don't have to agree exactly on the specifics
and
of it.
A violation of the Federal Election Campaign Act. So that's the third one, right? So they don't have to agree unanimously on those, but they each have to find one of those. So it's really complicated. And the jury, even if they took notes, I mean, I've been reading these instructions. There are 50 pages of them, and that part is really complicated. So I think it shows that they went back there, and maybe someone said, I don't know, and they just said, okay, what's the rule here? What do we have to follow? And in New York, you cannot take the jury instructions back to the room with you, which has always struck me as ridiculous.
Well, that's why they have to keep asking, because they don't have.
And the judge told them yesterday, he said, look, if you have any questions, feel free to come. The judge has been really solicitous of this jury. You know, whatever they want to do, you want to stay late, we'll say, wait, you want to go home?
Could they stay late today if they're close?
I think they could. I think he said to them, I'm not up to date on exactly, because it's supposed to be 4:30, but then he said they would talk about it. So I think if enough of them say they want to stay late, and this seems to be a jury that, maybe it's a real New York jury that want to stay late, you know.
What happens, June, if they just cannot agree on certain counts?
Well, so if they just can't agree on certain counts, if they agreed on some, I think the judge might take a partial verdict. But even then, when they come back and they say, Your Honor, we just can't reach an agreement, we have people who are holding out for whatever reason. Then what he'll do is give an Allen charge. It's called it's an Allen charge, but it's, we call it the dynamite charge. And that basically is the judge saying to them, you go back and you have to listen to other people, trying to get them open to the idea of hearing other people's opinions. That works an awful lot. And he may give that twice if he has to. So it's going to take a lot for this judge to say, you're hung. We'll have to redo.
But bottom line, they have to agree on all 34 counts.
No, they don't have. They can agree. In other words, what I'm saying is, the judge will try to get agreement, I think, on all of them. But if they come back and they say, Your Honor, we have a verdict on 1, 2, 7, 8, whatever, he may decide after giving the dynamite charge a couple of times, he may decide, okay, let's take that.
But that doesn't mean a mistrial, real quickly.
It would mean a mistrial on those particular counts, but the problem with a mistrial here is what we all know. The presidential election is looming, so when are you going to try this again?
It's a timing, it's a calendar issue.
And if you try it again, you're going to get a jury that's any different.
Yeah, it's just fascinating. Thank you so much. So appreciate it. June has been covering this every day, so be sure to check out her Bloomberg Law podcast. That's at 6 p.m. Wall Street time, right here on Bloomberg Radio. Bloomberg News legal analyst and host of Bloomberg Law, June Grasso.
Also, a big thank you to Bloomberg News correspondent David Gura and host of Bloomberg's The Big Take podcast. David, spending some serious time downtown outside the New York Supreme Court.
Hey, straight ahead, we're going to introduce you to the UK's richest plumber, a celebrity of sorts who regrets his big cash out to private equity. This is a most read story. It's next.
names that move markets are on Bloomberg.
It is President Biden's top priority to bring down the cost of living.
The United States' ability to spend without constraint is not unlimited.
We're in a very unusual time, and so the adjustments are taking place, and it's running through the economy.
We do need more innovation, more investment, single market and capital market union, and a relevant trade policy.
Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time. Hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, all in the red. Russell 2000, interestingly, up today. We've got the index of small cap shares advancing 1.1%, but a lot of red across the screen here with the S&P down 17, drop right now of 0.3%. Dow Industrials down 310, lower by 0.8%. NASDAQ is slumping 99 points, down by 0.6%. 10-year yield 4.54% with a 2-year 4.92%. Gold up 0.1%, 23.42 the ounce, and West Texas Intermediate crude down 1.6%, 77.96 for a barrel of WTI. Retailers moving in very different directions after earnings. The department store chain Kohl's plunging 23.7% after earnings. The electronics retailer Best Buy up now by 12.6% after earnings. And briefly, Elon Musk will testify in the SEC's probe of the billionaire's 2022 acquisition of the social media platform once known as Twitter. Recapping, S&P down 17, down 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, it is time to tell the tale of Charlie Mullins. From a working class background and working in a toy car factory to living in a multi-million-dollar London penthouse with a view of the Thames. And along the way, kind of building a very, very successful plumbing business that employed many in his own family. And then Timmy ended up cashing in when private equity came along. He made lots of money.
Okay, so life is good, right?
Yeah, sounds like it.
Or is it? The story, Carol, among our most read on the Bloomberg terminal and in the latest issue of Bloomberg Markets Magazine, co-written by Saba Meddings and Michael Sasso of Bloomberg.
With more, Michael joins us. He is Bloomberg News economy reporter in our Atlanta bureau, along with Bloomberg Markets features editor John Heckender, who edited the story. He is in Boston. Mike, let's start with you. You reported it out. Tell us about Charlie Mullins and his success story.
Yeah, well, that was largely done by my colleague Sabah in London. But yeah, she found him. He is quite the presence in the UK. I understand he's a bit of a personality, has some controversial comments on political topics often. But yeah, he does. He came from a very working class background, built the largest plumbing business in the UK. I think he sold it for something like over 100 million pounds or so. And he's, I guess, living the life. He has a penthouse in London. I think he lives near Tom Jones, the singer.
I love that.
So, yeah, a plumber just down below Tom Jones. So yeah, very interesting.
All good.
Okay, so Michael, why does private equity want to, quote unquote, roll up home service businesses? Because these are businesses that I think have been pretty tough to scale historically. Whether or not you have, 4 folks working on air conditionings on your team or 400, you still got to send them all to homes and offices.
And to keep in mind, in 5 minutes' time at the bottom of the hour, expect comments from ECB's McLuth, speaks at the Irish Association of Investment Managers annual dinner.
It's a very fragmented industry. I mean, you don't have a dominant player like a McDonald's or a Starbucks, and so imagine it's kind of low barriers to entry. You can buy, a plumber or an HVAC company in Phoenix, for example, and then just add onesie twosie around the country. And some you've taken a small company in Phoenix and built it into a fairly large company. There's a firm I interviewed based in Atlanta that went from one acquisition, built up 26 or 27. Suddenly, it's a $1.5 billion a year company. So it actually can be scaled. So it's a very fragmented, and it's so low barriers to entry, as I said.
Well, John, Michael.
Fed's Williams say the markets understand the Fed's outlook shifts with incoming data.
We see private equity do, whether it's vets, whether it's, as you report on plumbers, kind of these home service companies, hospitality. I mean, we have seen private equity go into these industries, doctors' practices, right, and kind of roll them up into one big business.
Yeah. Well, it has happened in a lot of industries, and for sure the last several years it's caught fire in the home services industry. And we don't know how it's going to play out. As we mentioned in the story, there's some concern about you're taking a family business that has personal relationships with thousands of customers, millions of customers around the country and the UK, and you're creating corporatizing it. And so there is some pushback. There's some of these owners are kind of angry. They think that when they went corporate or they were bought out, sometimes the service is not what it once was. Certainly that's what Mr. Mullins in the UK thinks. Here in the US, a little bit too early to say. I talked to a number of owners who are fairly happy so far. They think that they like some of the changes that have been made.
But what I'm saying is that this is something we see private equity do, right? They find industries that are often kind of just separate small business owners, if you will, whether it's veterinarians. I've seen it with our vet. They became part of a large practice and then private equity got involved. I've seen it with healthcare folks, where there are individual practices and then all of a sudden you see private equity buying up, and they're doing that with plumbers, right? Or, electricians. Like, these are areas that they are finding opportunities. We're seeing this increasingly.
Yeah, well, like I said, some of that goes back to the fragmented nature of it. It's hard to go into and establish a business where there are huge businesses, dominant businesses, and to roll them up. It's a lot easier when it's a fragmented industry. And also, money's been a little bit tighter in recent years, with the higher interest rates and whatnot. And so it's a little bit easier to digest a company that you're maybe a $50 or $100 million plumbing or HVAC shop than it is acquiring a multi-billion-dollar company. So interest rates kind of play a role in this a little bit.
Hey, Michael, I'm curious in terms of the reporting that you did around the United States, what you heard from the large home services providers / mom and pop home services providers you spoke to about why they've resisted selling to private equity or to a larger company.
Yeah, that's interesting. There's a fella here in Atlanta where I am, Jay Cunningham. He owns a very large plumbing services firm called Superior Plumbing, and he has resisted multiple times. In fact, he says he gets offers, sometimes once.
Shortly
a week,
expecting
sometimes more,
possible
to sell
comments
out.
from ECB's
And
McLuth.
Frankly, he's got 5 members of his family working for Superior Plumbing. He's concerned. He's concerned that these companies will slash heads, basically overly corporatize things, take local control out of local people's hands. And he told me he pays one of his top people, his general manager, $500,000 a year. Would one of these corporate firms see this person as a cuttable overhead? And he's worried about, at least he said he's worried about his people.
John Heckinger, we want to bring you into the conversation. You edited this story. I was talking, we were talking with Michael about this idea of how this is kind of out of the PE playbook of finding an industry where there's opportunity and kind of rolling it up into maybe a larger investment holding. I am curious how this story came on everybody's radar and how you guys wanted to report it out. Walk us through a little bit of that.
Well, Mike had sort of identified this trend last year and did sort of a shorter story about what was going on in the U.S. And then when Saba came on to the story of Charlie Mullins, it was irresistible. It's rare that you can have a photo of a guy with a Rod Stewart haircut and a purple suit in a business magazine. So we were delighted that he was available. He wanted to talk about it, and also that he would very openly talk about his regrets. It's not easy to get people in the industry who've sold out to say what it's really like. And he had hoped that his children would work at the company, as many founders do once they're bought up by private equity firms. But they found that the culture just changed too much, and it wasn't a place for them anymore. So they're actually deciding to open up a business to compete with KKR at a headquarters right down the street. So he's not giving up.
Hey, John, I'm wondering if to you this sort of signals any kind of pushback to private equity or a trend that we're starting to see. I mean, I was struck because early this morning there was an article published in the Wall Street Journal in the column Heard on the Street about the headline is, "You can thank private equity for that enormous doctor's bill." And I'm wondering if we're starting to see some sort of pushback here to private equity.
Well, there has been some.
NYMEX WTI crude July futures settled at $77.91 a barrel, which is down $1.32 or 1.67%. Natural gas July futures settled at $2.57. Also seeing gasoline June futures are settling at $2.40. Diesel June futures at $2.37.
A $60 million check for a plumber in Atlanta is a pretty darn good payday, and you have to have some serious conviction to not accept a check like that could set somebody up for life with truly generational wealth. And I'm wondering if you're starting to see any sort of pattern when it comes to the folks that you're speaking to, that they're like, okay, well, an exit would be nice, but not this type of exit.
I did get some of that. Certainly, Mr. Cunningham. I will say I spoke to some people, let's say privately off the record, who had some concerns. They did sell out. Maybe they didn't feel comfortable kind of telling, but they did have some reservations about some of the ways that their people were being treated. Again, they were reluctant. Frankly, most of these people I think were under some kind of non-disclosure agreement, so they were not free to. But there certainly is, and there's a within the industries, there's a deep reservation. It's very split. You could talk to people who have not sold out, and there's almost the feeling like this person, this competitor caved or sold out within this coterie, this contingent that has not sold out yet.
Yeah, and I will point out in your story, the Wall Street controlled companies who are doing this and picking up some of these companies say they're professionalizing these businesses while preserving their connection with customers. So just putting out. Anyway, there's a lot of fun details in this story, including Mr. Mullins' custom-made red Steinway piano. So I highly recommend you read this story. Michael Sasso, thank you so much. And of course, our thanks to John Heckinger. This is among our most read. Coming up, another most read. It has to do with the upcoming U.S. elections and how it will be different this time around.
First up, though, checking the latest world and national news with Amy Morris in the Bloomberg 99.1 Newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. The jury in former President Donald Trump's criminal hush money trial is to resume deliberations after asking to revisit portions of the judge's instructions and rehear testimony from multiple key witnesses. They had been at lunch. That lunch break is now over. The jury foreperson told the court that the jurors would also like some headphones and a speaker so they could listen to the recordings that are in evidence. Now, the jury deliberated for about 4.5 hours yesterday. They did not reach a verdict. The case could end in a mistrial if the jury can't reach a consensus after a few days. And a little more than 5 months before the general election, about a dozen states have now taken up legislation against so-called deep fakes in political advertising. Ryan Kennedy studies the intersection of public policy and artificial intelligence at the University of Houston.
Policymakers have to chart this very difficult course between encouraging the development of what are quite useful technologies, while at the same time making sure that they aren't put to bad use.
Political science professor Ryan Kennedy at the University of Houston. And the Supreme Court has now cleared the way for a National Rifle Association lawsuit against a former New York State official over claims that she violated the NRA's free speech rights. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? One of y'all's in trouble.
Wow.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg. The top names in global leadership are on Bloomberg.
The ultimate goal of doing away with the central bank still stands. The discussion regarding the central bank is primarily moral in nature. The way we see it, there has been a cultural change in Argentina. Today, wages are miserable, not through our own fault. That is due to 20 years of populism. Argentines have understood that populism is no solution, and that the quick fixes they sold to them during the last 100 years, both the criminal politicians and criminal economists, they were all false. And we need to opt for a pure orthodox market-based solution. And that's what's going to make us succeed. And that's what's underway. In fact, there are already indicators today that show that activity in the agriculture sector, in the oil and gas sector, in mining, well, our economy is recovering strongly in those departments. There are indicators that point to the fact that Argentina could really make a strong comeback.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Biggest names in business choose Bloomberg.
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, all trading lower right now. Looking at a 19-point drop in the S&P 500 index, 52.47, down 0.4%. Dow Industrials down 332, drop there of 0.9%. NASDAQ down 103 right
Brent
now.
crude futures settle at $81.86 a barrel. That's down $1.74 or 2.08%.
Pricing glitch earlier today for both the Dow and the S&P 500 index. That got resolved shortly before noon New York time. Ended up being a losing day for the S&P. Down now by 0.4%. 10-year 4.55%. 2-year 4.92%. Gold up 0.2%. Little change there. 23.42 the ounce. And West Texas Intermediate crude down 1.6%, below $78 a barrel, 77.98. Lots of retailers out with earnings today. Foot Locker shares are absolutely surging. They are jumping by 18.4% after the sneaker retailer's turnaround plan got back on track and now appears to be on solid footing. Also out with earnings today, we heard from Birkenstock. Shares are surging after posting robust earnings. Birkenstock up now by 11.9%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
That is one of my gainers. All right, Charlie Pellet, thank you so much.
Deep tease, Carol Master.
Yeah, about an hour or so from now, hour and a half. All right, we know this November's U.S. presidential election, very likely to be a rematch, of course, between President Joe Biden and former President Donald Trump. What may be different, though, this time around is that if President Biden is back for a second term, it will be thanks, Tim, to a different group of voters.
It's great to have back with us Bloomberg News White House and politics reporter Gregory Cordy in our Washington, D.C. bureau, because he, along with the team over at Bloomberg News in Washington, D.C., wrote about the demographic changes and migration from one state to another state and to swing states specifically that have changed since 2020. Okay, so what has changed since 2020, Gregory, when it comes to the U.S. electorate, the first matchup between Joe Biden and Donald Trump?
Yeah, so one of the biggest things that's obviously changed since 2020 is that we've had this great sort of post-pandemic migration, and we've had millions of people moving out of some states and into others. It's accelerated this move from northern states to the Sun Belt, and that is really rapidly changing the demographics of some of the most critical swing states. When you think about those Sun Belt swing states, we're talking about Arizona, Nevada, Georgia, and North Carolina, and they've seen a huge influx of people just since the pandemic, as people can, obviously they can work from home, they can work from anywhere. They're seeking a nicer climate. Some people are retiring, but then we're also seeing, obviously, a new cohort of voters who have turned 18 since the last presidential election. Young voters tend to vote differently. from older voters. You also have, older voters dying off and ceding to the new generation. And so in some of these swing states, we've seen 15%, almost close to 20% of the electorate is going to be completely different from the voters who elected Joe Biden. And that's something that both of the campaigns are trying to identify who those voters are and how they reach them.
Gregory Cordy, you are preaching to the choir. I've got a daughter who just turned 21. She's going to be able to vote for the first time in a U.S. presidential election.
In that swing state of New Jersey?
In that swing state of New Jersey. But I also have a lot of family members who have been moving from the East Coast in the New York Metro, largely, and then down south, if you will. Okay, some states changing more than others. Walk us through that. Let's get down into the specifics.
Yeah, so we've been talking about these same 7 swing states. We talk every month about our Bloomberg News Morning Consult poll of those swing states. We're really hyper-focused on the handful of states in the Electoral College that are going to make a difference. And by the way, that's another thing that's changed since 2020 is that 6 electoral votes on net have shifted from states that Biden won in 2020 to states that Trump won in 2020. So we're dealing with a new map here. The most changed states, according to this analysis that I did with our colleagues Andre Tartar and Elena Mejia at Bloomberg, it's Nevada. It's a very fast-changing state. It's got a lot of demographics. It's got a Hispanic population. Hispanic birth rates are higher than the general population, but it's also got a huge influx of people, mostly from California, but from other states, moving into the state. And it's tilted as a Democratic state, and it'll be interesting to see whether these new arrivals to Nevada, who are maybe fleeing higher taxes in California, might be a little bit more fiscally conservative. That might suggest they're Republican, but they're also maybe more socially liberal. After all, it's Nevada, right? It's Las Vegas. And so those countervailing tendencies make it really difficult to sort of suss out who do these demographic changes advantage more, Biden or Trump, because there's all sorts of things going on underneath the surface of these demographics that even within groups, Hispanics and black voters are voting more Republican than they used to. So that's a trend to watch as well. And the number of non-college educated white voters is declining across all of these swing states. That's a big cohort that has voted for Donald Trump in the past.
Okay, so you talked about Nevada just now. Let's talk a little bit about Arizona, because that's been the recipient of many people, including those from California, post-pandemic, who've moved to the state for various reasons. Another state that was decided by a margin of 5% or less. What did you guys find in your analysis in Arizona?
Yeah, Arizona is one of those super close states, along with Georgia, decided, as you said, by just a couple of tenths of a percentage point. And it's actually the one state, when we look at voter registration data, where more registered Republicans have moved to Arizona since 2020 than more registered Democrats. Of the 7 swing states, that's the only state where that's true. Also, fast-growing state, and also, impacted by immigration. Keep in mind, demographics is one difference between 2020, and it's changed a lot. It's changed more than it has in the lead up to previous presidential elections of recent years. But we also have a changing issue environment, and immigration is feeling that directly and indirectly, because remember, another component of the electoral change here is naturalized U.S. citizens who are eligible to vote for the first time after becoming U.S. citizens. That's one of the rights and responsibilities to come with that. And so many of these swing states are adding new citizens to the U.S.
Well, Florida saw a big influx, right, of naturalized citizens. Could that change something in Florida?
Yeah, what's interesting about Florida is that it's got a lot of retirees, as you would expect. It's got it's benefited from this post-pandemic migration, perhaps more than any other state. And it does have immigration, but it's a different kind of immigration. The flavor that you get is different in every state. And the immigrants coming to Florida tend to be Cuban, Venezuelan. They are fleeing leftist authoritarian regimes, and that has historically sort of put them more in alliance with Republicans on foreign policy. But all of these groups are dynamic, and they have changing attitudes, and so we can't necessarily take it for granted that there'll be Democrats or Republicans in 2024. That's something that we'll have to watch.
Gregory, you mentioned Georgia, so we got to go there. The former president, Donald Trump, facing some legal challenges in Georgia as well, but it's an incredibly important state to the winner of the 2024 election. What did your analysis tell you about Georgia?
Georgia is a state that has one of the highest or the highest non-white sort of population of the swing states, especially black voters. And, you know, I think of Atlanta as the capital of the black middle class in America. So the suburbanization that's going on there and people coming back to, you have a lot of, you know, black voters from around the country who are sort of returning to the Deep South, returning specifically to Georgia and Atlanta, and are creating a very important voting bloc there. But at the same time, they're also, as they become more prosperous, are becoming, you know, a little bit more unpredictable in their voting patterns. So that's why we've seen former President Trump really begin to make some small inroads among Hispanic voters, black voters who used to be reliably Democratic voting bloc, now a little bit more up for grabs as they become more suburbanized and sort of move up on in income in a lot of these states.
Hey, Gregory, just 30 seconds left here. In an election likely to be decided by razor-thin margins in just a handful of states, this reporting, these changing dynamics, does it favor one party or candidate over another? And again, just really quickly.
Yeah, that's the million-dollar question, right? And it's very hard to suss out. If you had asked me 4 years ago, these are going to be the demographics in these swing states, who does it favor? I would have said unequivocally it favors Democrats. But again, some of the assumptions that we used to make about different voting blocks and how they vote are beginning to change. And so Trump's inroads among some of these demographics is starting to change the equation.
Fascinating, no doubt about it. All right, Gregory Corti, thank you so much. Bloomberg News White House and politics reporter. Coming up, everybody, straight ahead, making $500,000 a year at Walmart. It's a thing.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffman arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffman also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Good morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. Now, your news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Sources tell Bloomberg film and TV producer David Ellison has sweetened his bid for Paramount Global, offering to increase what he is willing to pay to investors unaffiliated with the company's controlling stockholder. The source says Ellison's Skydance Media is reducing the amount it is willing to pay controlling investor Shari Redstone and directing more money to the company's non-voting shareholders. Shares of Paramount Global, they're up now by 2.7%. Elon Musk will testify in the Security and Exchange Commission's probe of the billionaire's 2022 acquisition of the social media platform once known as Twitter. Musk agreed to sit for a 5-hour deposition at one of the SEC's offices, dropping his plan to appeal a court decision forcing him to comply with a government subpoena. Salesforce.com shares are now plunging by 21.3%, most in almost 16 years, after the software maker projected the slowest quarterly sales growth in history, renewing concerns that the company will be left behind in the AI boom. Shares of Salesforce down now by 21.3%. HP Inc. out with quarterly revenue that topped analyst estimates, including the first increase in PC sales in 2 years. An optimistic signal for a long-awaited rebound in that market. Shares of HP Inc., they're up now by 17.6%. C3 AI shares are rallying after the software company gave a stronger than expected annual sales forecast, helped by demand for artificial intelligence features. AI up right now by 19.5%. Coming up after the close of trading, we will be hearing from Dell Technologies and Costco. And those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. The jury in the former president Donald Trump's hush money trial has resumed deliberations after asking to revisit portions of the judge's instructions and rehear testimony from multiple key witnesses. The foreperson also told the court that the jurors need some headphones and a speaker so they can hear recordings that are already in evidence. The jury deliberated for about 4.5 hours yesterday. They did not reach a verdict, and the case could end in a mistrial if the jury can't find a consensus after a few days. Secretary of State Antony Blinken traveled to the Czech Republic today to highlight NATO's support for Ukraine against Russia's invasion.
This is critical. By the end of the year, we anticipate that effort, led by Czechia, will produce nearly 1 million shells for Ukraine.
During a meeting with the Czech defense minister, Secretary Blinken said Czech officials have been going around the world to find the munitions that Ukrainians need on the battlefield. Elon Musk will testify in the SEC's probe of the billionaire's 2022 acquisition of the social media platform once known as Twitter. Musk agreed to sit for a 5-hour deposition at one of the SEC offices. The SEC wants more information about Musk's purchase of Twitter stock and statements that he made about the investment before his $44 billion purchase of the social media platform. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and now back to Bloomberg Business Week with Carol Masser and Tim Stenivek.
All right, Amy, thank you so much. It is time for our One More Thing, and this is a most read story on the Bloomberg terminal. And the headline on it, it says Walmart managers, they really can make about $500,000 a year now. And it gets into one individual in particular, Greg Harden. He worked at Walmart, been a manager for about a decade or so in the Dallas area, and he thought he had seen it all, and then things changed at Walmart.
Well, look, it makes sense that companies want to do everything they can to attract and retain talent, because attrition can cost companies a lot of money. And that's what Walmart noticed a few years ago. Their attrition rate was higher than competing big box stores. So what they did was they changed their compensation structure to try to get that attrition rate lower. What I will say, Carol, is being a store manager at Walmart, at least according to this article, is no easy feat. I mean, we're talking hours on your feet every single day, working 6 days a week, getting up at 5 a.m. or being there at 5 a.m. And of course, being responsible for sales at a store and the employees at a store. That's some tough stuff.
Yeah, some burnout. The burnout rate at Walmart has been pretty significant. So what they did, they're the world's largest retailer. You know that. About a few years ago, they basically, when their attrition rate for store managers spiked to almost double that of other big box retailers such as Home Depot and Target, according to some data from some human resources companies, an outside resource company, if you will. Departures first ticked up when Walmart cut management ranks in the late 2010s. So they started to do some different things when it comes to what they were giving their managers. And a lot of it had to do with compensation and really souping it up, if you will. One of the most significant changes for managers in January, they announced this. They'll now receive annual stock grants of as much as $20,000. Average base salaries for store managers were raised to $128,000 a year from $117,000, so a little bit of a bump there. The retailer also changing the way it calculates those managers' bonuses. Evaluate on sales, but it also the profit generated by a manager's store will play a bigger role going forward. So they make the store more profitable, those managers benefit.
Again, some hard work. So Greg Harden, who's profiled in this piece, he oversees 400 plus employees, more than $100 million in sales. By 7 a.m., he's at the store getting feedback from overnight staff. He's checking the grocery section. Throughout the day, he makes sure the aisles are full. He's got a 10-hour shift. He's walked as many as 6 miles, talked to about 200 people over that shift.
Yeah, it's a lot of work.
It's a lot of work.
Great story, among our most read. Hey, for those of you sticking around on TV, the close is coming up next. On Business Week, we are continuing, including looking at two tech companies, Salesforce falling in today's session, and then what to look out for Dell when they report later.
This is Bloomberg.
Software shares lag, apparel stocks shine, and investors left with a short runway to sort it all out. Live from Studio One here at Bloomberg headquarters in New York, I'm Romaine Bostic.
And I'm Alex Steele. Short runway because, you know, for an hour there, Romaine, we were not getting updates on the S&P index and the Dow. That was kind of fun for the day. Let's take a check-in here on where we are. So the idea is we're selling heavy on equities, and it's a buy bonds kind of thing. It's definitely tech that's taken the blame, but it's pretty much across the board. You got tech lower, really look at Salesforce, the S&P, but also commodities lower as well. You get the safety trade coming in to the bond market, Romaine.
Yeah, I want you to take a closer look, too, at the divergence that we're seeing right now between the broader market, particularly the NASDAQ and the Russell 2000. In fact, it's the biggest daily performance gap that we've seen in more than a month. The NASDAQ, of course, dragged down by Salesforce as the ultimate growth stock, telling investors to prepare for what will be the slowest quarterly sales growth in the company's 25-year history. Renewed concern out there that software companies really aren't reaping the full benefit of that AI hype train. Rishi Jaluria over at RBC Capital, he foreshadowed this in an interview yesterday.
Maybe I would question if a lot of the focus of CIOs on AI is coming at the expense of expansions for Salesforce.
Oracle, Intuit, Adobe, and ServiceNow also selling off alongside Salesforce. Meanwhile, the Russell 2000 and the S&P midcaps rallying on the back of encouraging earnings out of the retailers. That includes Burlington, Birkenstock, Foot Locker, and even, Best Buy. Gap, Nordstrom, and Ulta all have the potential to add to the retail optimism when they report after the bell tonight. And while each one of those earnings beats was much more specific to each individual company, idiosyncratic stories, if you will, there is a tie that binds them all together. And unfortunately, that tie is one of inflation risk. Foot Locker CEO Mary Dillon said her consumers are still pressured by inflation, a sentiment echoed by the CEO over at Kohl's, as well as Burlington's chief, who now sees high-income shoppers feeling the pinch. We're going to get a more definitive read on that tomorrow, Alex, with the latest monthly PCE update from the U.S. government, which will show how much inflation is eating into personal income and spending.
And we got a preview of that, Romaine, today when we got the second quarter read of the first quarter GDP, and this came from the personal consumption category. It fell to 2%. The previous reading was 2.5%. So this is a great chart of the last 5 years. You can just see how we're kind of rolling over a bit. However, growth in disposable income was marked up to 1.9%. That may bode well then for spending down the road. But this number right here definitely shows, Romaine, that consumers are tightening their belts, and you know that you can blame inflation.
All right, let's kick things off to the close here on this Thursday afternoon with Kate Moore, head of thematic strategy and global allocation team over at BlackRock. Kate, great to have you here in studio.
Yeah, great to be here, Ramin.
Let's start off, I guess, talking about kind of the health of the consumer, because I mean, we've gotten all these retail earnings, and we should point out it's a mixed bag. Despite the rally we're getting today, you have some stocks doing great, you have other companies like Kohl's doing poorly. Is there a tie that sort of binds all this together?
It's been really difficult to say there is one specific trend around the consumer. I mean, this is the challenge. You get a cross current every day, and then the market trades on that anecdote or that comment from a management team or, a same store sales number, and they try and extrapolate it out to the rest of the entire industry. I think it's really hard to tell. We think the consumer is in okay shape, not exceptional, but okay shape, and that there's a lot of divergence underneath the surface. We know the low-end consumer has been under more stress. We know consumers are worried about the headlines around inflation, even as their own incomes start to grow. But that kind of perception of persistent inflation may lead to a change in behavior in the back half of this year, and that's what we're watching. Short answer, I don't really know.
Yeah.
It's all over the place.
Well, I mean, I remember, I don't know, it was a couple of years ago when we were also having these conversations about the health of the consumer, and instead of sort of the consumer dropping off the map, we just tended to see that consumer spending rotate, right?
Yeah.
From goods to services, maybe back to goods and then back to services again. Is it plausible or possible that we just see a rotation in that spending, or is this finally that cliff where consumers just decide, you know what, I've bought enough?
I think there's this big gap between the rhetoric and the action at this point. There's a lot of I feel uncomfortable, and then, perhaps they're going to some stores less than others. But I think the experiential spend is going to be really resilient. And we're going to be watching this throughout the summer as people go to music festivals, as they spend in restaurants, as they travel. Our expectation is, despite the concerns the consumer has and some of the anecdotes coming out of first quarter earnings, the experiential spend is going to look quite good over the next couple months.
So what's positioning like? What do you like? Are you overweight to risk right now? And what does risk mean to Kate?
Yeah, well, Kate likes risk. I think you guys know me well enough to know.
True. You like EM, so I mean, you were an EM person. So
I was an
EM
person, yeah, and but I love equities still. And I have a friend who sort of dubbed me Miss Bull Market over the last 15 years, but it's not been wrong either. We actually have overweight equity risk in the portfolio, a tiny bit below where we were in kind of the peak in March, and we see actually a lot of opportunities on these down days. There's some really high quality companies, let's say in the tech space, that are getting a little bit more attractive from a pricing perspective, and that we want to own for a multiple year basis. So we're being opportunistic there. I think we're going to have a good, strong end of this year, even if we have some turbulence over the course of the summer. So for those people who are worried about headlines and worried about the election, I would say don't sit this out. In every presidential election year since 1944, the S&P has ended up at the end of the year. And so look through the turbulence, stay focused on the secular stories, stay focused on technology and growth.
So let's go to technology for a second, because technology is what's getting really hit today, in particular the software stocks like a Salesforce. I know you don't do specific names, but is the idea that, or like broad tech, you want to buy on a dip, or are you being super targeted? Because software will eventually benefit, but basically you're seeing the spend just move from like cloud to AI. It's got to swing back.
Well, I would say even within software, there are a bunch of different verticals that are all getting hit in the same way and doesn't make any sense. Even if companies direct more of their spend towards AI, there are parts of the software space, and I would put kind of cyber and security there, that are going to be Teflon areas of spend. No company can afford to have a data breach. No company can afford to have, any information leak out, especially as they use more cloud-based services and especially as AI becomes a bigger part of their process. So, I mean, those stocks have sold off today as well, and yet I still see very strong fundamentals over the medium term there.
Is that going to be broad-based, though? I mean, everyone's sort of looking for who the winners are, and I mean, up until now, it's been a pretty
Fed's
narrow
Bostic says the
selection
outlook
process,
is
right?
inflation will
NVIDIA's
come down
and
very
Microsoft's of the
slowly.
world, but everyone is sort of looking forward to broadening out of that. Is there, when you look at that main theme here with AI and this sort of new inflection in technology right now, is there hope that this broadens out?
Everyone wants it to broaden out because there's a fear that they've missed it if they haven't been in some specific hardware names over the last year and a half, 2 years. I don't think that's a fear people should have. I think there's a lot more upside. One of the things we talk about on the team is that the total addressable market for AI is so much bigger than anyone even thought 3 months ago, 6 months ago, 12 months ago. We probably don't have a great grasp there. But there are additional opportunities, I think, to invest in the theme. And these are kind of cloud-based services, overall AI infrastructure. And of course, like everyone else, we're doing a lot of work on the data centers and power and the resources required to really power up AI.
All right, Kate, gonna have to leave it there. Always great to talk to you.
Thank you.
Kate Moore, actually, believe it or not, Kate, I misspoke. You're sticking with us, I'm told.
Okay.
Kate Moore, head of thematic strategy and the global allocation team over at BlackRock. She's going to stick with us. When we come back after the break, we're going to have a deeper conversation with her about what's going on out there. We're also going to take a closer look at those shares of
Fed's
Salesforce,
boss
which
says
are
I don't
plunging
see a
today
rate
here
cut
on
in
the
July,
back
but
of
I'm
that
open if
very,
data
concerning
justifies.
Forecast, Alex.
All right, plus the insurance industry is bracing for a potentially extraordinary hurricane season in the Atlantic. So we're going to talk about that and other challenges facing the industry with Bruce Carnegie-Brown, chairman of Lloyd's of London.
And we're going to get some additional insight on the health of the consumer. G.J. Hart, president and CEO of the restaurant chain Red Robin Gourmet Burgers. He'll be joining us in a second, right here on The Close. This is Bloomberg.
Fed's Bostic says the Fed needs to stay in a restrictive stance.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Fed's Bostic says I don't think a rate hike will be required to reach the 2% goal.
And here's probably why. The CEO, Tom Kingsbury, saying on the conference call earlier, quote, "Our customers continue to be pressured by a number of economic factors, including high interest rates and inflation, while spending among our high-income customers has already remained steady. Our middle-income consumer continues to be impacted." Want to bring in Kate Moore, head of thematic strategy and global allocation team over at BlackRock. So if you wanted to bet on the consumer and what they actually are spending on and what they actually like to do, how do you do that in this environment?
Well, I would say two things. We talked a little bit before the break around the experiential spend. That I think is going to stay really resilient. And I think in the consumer, you do want to be a real security selector here. This is like a place to take idiosyncratic risk instead of saying, I'm buying all of discretionary or I'm buying all of staples. There are brands and companies that will be the haves, and they are, continuing to maintain their margins and continuing to maintain a lot of market share, and others that I think are more challenged. Look, we've heard from a lot of these consumer companies. The low-end consumer is cracked a little bit, the middle is okay, right, and the high-end consumer is spending well. So some of the companies that are really skewed towards the high-end consumer, to those kind of upper quintile of household earners, I think we want to be most overweight.
Most overweight, the high quintile earners there. How does that apply then to other sectors that has exposure to that as well? Like autos, I'm thinking about housing, like the ancillary consumer plays.
Yeah, look, here's what I will say.
Fed's Bostic says the economy is continuing to grow, but growing at a slower pace.
Economy. But we are really conscious of the two factors that are affecting consumer sentiment at the moment. Number one is, the pace of disinflation, which has a little bit disappointed so far in the beginning part of 2024. We all wanted to see prices come down further. We're not seeing that happen. And number two is around employment and unemployment. We know that people are well employed at the moment, but whether or not they get significant wage gains, and whether or not they feel those wage gains are enough above and beyond what they're experiencing in their inflationary spend, is what we're really kind of focused on. So the sentiment is TBD.
Yeah. How do you square that, though, with some of the comments that we're getting out of Fed? I thought it was interesting. John Williams was talking a lot about this, and he's basically saying, look, there might be actually room to cut rates at some point this year. We've heard from a couple of the Fed members say that. But then at the same time, they're also talking
Fed's
about
Bostic says, I expect to reach the inflation goal without an unemployment jump.
Look, now I know strictly from an inflation perspective, maybe that works in their favor. But when we talk about the health of the economy, that doesn't sound healthy.
Well, look, I think being a Fed decision maker right now is one of the most challenging jobs because there are all these cross currents and all these different pockets that we're talking about. We have not thrown in the towel on the possibility for one rate cut, or perhaps two this year if we resume the disinflationary trend. But the really important thing the Fed has to do is make sure that trend is going to persist into 2025. One rate cut does almost nothing for the low-end consumer that's feeling the pinch. Two won't even do that much. So it has to be something that they can continue over a period of meetings and not just a one or two off. And I think the bar to kind of get to that decision point is extremely high. And we're hearing that from the Fed speakers. But again, we haven't thrown in the towel. We still think it's a possibility that we'll get a cut.
Do you think this year?
Yeah.
Yeah, and is that going to matter? Like, for example, we came into this year and everybody thought we were going to get whatever, the 5, 6, 7 cuts or whatever, and that would have a material impact on things. If we do get to so late in the year where there's really only room for 25 basis points, maybe 50 basis points, is that going to have a material impact?
I don't think it's going to, but sentiment is really important, as I mentioned, as consumers are stressing about like food prices and insurance prices and all of these things that they feel are very sticky and look much higher than they did 3 or 4 years ago. And that's going to be really important to signal from the Fed that there's a disinflationary trend in place, particularly as we go into the election. Look, this is really tricky, but one rate cut doesn't change the spending pattern, but it may change sentiment, and it may increase the willingness to spend in the back half of this year.
Yeah, just the idea, and you've seen financial conditions loosen, just the idea of it. So,
right.
Kate, listen, it's so great to catch up with you. Thank you so very much for being here. Kate Moore, head of thematic strategy and the global allocation team over at BlackRock. So let's get another read on the consumer from the perspective of food and dining industry. You would think it would be a really tough industry to be in right now, but maybe that's not the case. GJ Hart is president and CEO of Red Robin Gourmet Burgers, and he joins us now. GJ, your actual number is disappointed, but your stock is up today. You've seen some really good growth just in the last couple months. What's driving it when some of the overall data shows a weaker consumer?
Yeah, well, first of all, it's great to be with you all. I would say that given our situation is somewhat different than the backdrop of what's going on in the overall economy, meaning that we've got a comeback situation here where we've developed a strategy called the North Star Plan. So we've improved our hospitality. We've added back great quality food. 85% of the menu has been improved. And we're really focused on going back to bringing this iconic brand relevant and positioned well in casual dining. And so what we're seeing from the consumer at this point, and part of the reason why in the first quarter may not have been exactly what people expected, what they were really surprised with is our sequential improvement during the quarter. And then in fact, we reported positive comp store sales in the first 5 weeks of the second quarter. So what we're seeing is real improvement and real growth in terms of lapsed users, new users, et cetera. And, overall from the consumers, we're seeing our high-end premium burgers still do extremely well. Our lower tavern line of burgers, which we do see some trade down into that, but that's okay. And our overall add-ons, desserts, appetizers, et cetera, are holding steady. So at the end of the day, we're seeing a pretty resilient consumer. And, what we like to see in us with our comeback plan is that we're seeing real growth here. So we're pretty optimistic.
Well, when we talk about sort of the growth going forward, GJ, particularly if we are in a period where we are seeing consumers be a little choosier, if you will, here, who are you looking to in terms of your competitors that you, I guess, need to be most concerned about, or at least the ones where you feel like, okay, this could potentially be where those customers go. Let's find a way to keep them in the doors of Red Robin.
Yeah, so look, I would say that any of the casual diners from Chili's, Applebee's, Texas Roadhouse, clearly we pay attention to. But given where we are in our journey, I liken it this way. If you're running a 100-yard dash and you look over your shoulder, you're going to lose the race. And so for us, it's first things first. Let's make sure that we come back to what this iconic brand stands for, being relevant and creating that fun environment, great food, great hospitality at a reasonable price, everyday value, and focus on really executing that at a high level. And if we do that, clearly we need to pay attention to what others are doing, but we're going to get our disproportionate share.
How are your costs and how are you managing them in terms of food and input and also labor?
Sure. Well, from an overall commodity perspective and inflation in overall of the basket, we've reaffirmed sort of 3 to 5%. And while we'd like to see it a little bit lower, it's not as bad as it's been in the previous years. So we've planned for that. From a labor perspective, it's certainly challenging. You see some of the actions taken by states and some of the mandates that are coming through, and there's always pressure on labor. But in our case, our strategy is bring back hospitality and put the appropriate amount of staffing in the restaurants and stay the course to earn the right for guests to come back and enjoy Red Robin. And so that's some of the investment we put into the first quarter. We put it into 2023, and we'll continue to do so because we believe in the long game here, that overall that will continue to drive traffic, and that's the name of the game.
So GJ, I mean, what type of customers though are now sort of making up the bulk of what you get? Are you seeing like sort of big groups of families, or is this more individuals and couples coming in? Give me a sense of the complexion.
Sure. Well, look, we're a family-friendly restaurant where you can have a lot of fun and bring your kids. But at the same time, we're an environment where it's okay to come to us for a date night or an evening out or a business meal. And so we're seeing a pretty broad spectrum of folks coming to dine with us. But again, in our case, given where we are in our journey, we're seeing a lot of lapsed users come back because we're telling them, hey,
So according to sources, TikTok is working on a separate US app algorithm.
We're creating more fun, and so come give us a try. So we're seeing lapsed users. We're seeing new users at levels that we haven't seen for a while. We see that in our launch of our loyalty platform, and the numbers that we're seeing are, some of the highest numbers in terms of new members. So lots of good improvement, but generally speaking,
And the US is reining in AI chip sales to the Middle East by NVIDIA and AMD.
And CEO of Red Robin Gourmet Burgers. When we come back after the break, a closer look at the big downdraft that we're seeing right now in the software stock. Salesforce, the biggest decliner in the S&P, the biggest decliner in the Russell 1000. That's UiPath, a 34% drop in those shares on the back of a bad earnings report and the ouster of its CEO. That's coming up next. This is The Close.
NVIDIA shares extend decline to session lows, down 2.4%.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. We do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything.
We have some breaking news for you. Apparently, the U.S. is reining in AI chip sales to the Middle East by NVIDIA and AMD. The U.S. is worried about the technology getting diverted to China, and they're worried about that large-scale AI accelerator shipments to the Middle East and then eventually going to China. It's unclear how long this review will take. There is also not a concrete definition of what constitutes a large shipment, so there are much more questions than answers, but the stocks are moving on that. NVIDIA stock is down about 2.5%, right around those session lows. Romain?
All right, one of the big movers out there. Let's take a look at some of the other movers here. Our top calls, the big movers on the back of analyst recommendations. And we start off with Corning here. An interesting move to overweight over at JP Morgan, which says cyclical and secular tailwinds.
According to ICI, U.S. money market assets rise to $6.07 trillion in the week to May 29.
Upcycle in revenue by as much as 7% through 2026. Shares up by 3.5%. Next, let's go to life sciences equipment maker Agilent, getting cut to sell over at CFRA after the company slashed its profit and sales outlook. While the analyst expects a better second half, he's still skeptical about Agilent due to continued weakness in its business in China. Those shares having an awful day, down about 8.5%. And let's end on UiPath, the disappointing annual forecast and the surprise departure of its CEO, spurring a number of downgrades, including a cut to sector weight over at KeyBank. Analyst Jason Celino citing near-term growth challenges for the company, as well as heightened execution risk. He scraps that $27 price target altogether, and investors appear to be scrapping the stock altogether. The shares having their worst day since they went public all the way back in 2021. Those are some of our top calls, but we do want to stick on UiPath here with Jason Celino, equity research analyst over at KeyBank. And Jason, let's focus in on the CEO change, because that really seemed to rattle a lot of folks here. This was a CEO that was brought in with a lot of fanfare before this company went public, a great pedigree from SAP, a great pedigree from Google, and now he's out the door. Any sense of why?
Yeah, thanks, Romain. Thanks for having us. Definitely a surprise to us. Our prior thesis was predicated on some of the improvements that he was planning to make. It'd only been 3 months since he was promoted to sole CEO. The company says he's leaving for personal reasons, and the co-founder, Daniel Dines, who will be returning as CEO, maintains a good relationship with him, but definitely a surprise to us.
Does this all just point to the fact that part of that is obviously a UiPath issue, right? But overall, you're looking at the software industry really struggling because you have companies that are diverting money from data centers and software to basically AI. Where are we in that cycle?
Yeah, no, that's a fair question for sure. I think in an environment like this, where it's a little tougher to close deals and sales cycles might lengthen, when you are making go-to-market changes, it can exacerbate some of the macro issues as well.
All right, hey, Jason, thanks for jumping on with us. Really appreciate it. Jason Celino over at KeyBank Capital Markets. It just depends on when we get that trough, right? It's going to be really hard for these stocks to find their footing when you have all the money just going to AI, unless you can offer both.
Yeah, and that was the big question here. I mean, when we saw Salesforce's earnings, I think everybody was so rattled by the slowdown in growth, but they're also rattled by the idea of what is the AI narrative. Salesforce is the behemoth. They'll have an AI narrative. Yeah. But what about these other second-tier companies? No disrespect to UiPath, but if they don't have that narrative here, investors aren't going to sit around and wait for it.
But even in Salesforce, it's a division that has AI, even though it's relatively small, but still growing 25%, and it's still got really hammered. So what do you do if you're UiPath or Workday, for example?
Well, they could start by getting the new CEO and having some guidance here going forward for those investors out there. All right, a lot more coming up here on The Close. Stick with us. We'll be back in a moment. This is Bloomberg.
Do you feel like this age of abundance over the last few years of just how much was being made?
For my personal taste, I am thrilled at what I get to find every night if I have time to look for something. So I personally don't think too much was made. I think the customer will tell us when there's too much made and they won't watch things. And I think part of the misalignment I talked about before is imagine if things didn't get picked up or movies didn't get made that people didn't watch or go to see. That's how it used to be. The customer decided. I do think there's going to be less made in the middle price range. I think there's going to be more made in the higher price range because when you get to global events like Barbie or Oppenheimer or Super Mario Brothers, it's worth the investment, and it's clear that the audience is there, and they just need to be given what they want. The middle, which ends up, quickly on one of the services in a way that we're watching movies that we don't know how they got made or when they got made and all of that. I think that will probably be curated better, and I hope there's more inexpensive things that give more people the chance to express themselves and have their work seen.
We'll have to build a portfolio of interventions. Lifestyle will also play into for some of them, and I think we can help many patients get down to a weight that they can maintain and live the life they want to live and avoid many comorbidities for the healthcare systems.
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostic.
And I'm Alex Steele. Let's get back to this news that just broke, Romaine, is that the U.S. is apparently reining in AI chips that are being sold to the Middle East by NVIDIA and AMD. They're worried that could be a gateway then to China. Yeah, I mean, I was surprised by this and also not surprised. I mean, given, of course, how the approach they've taken with China, it sort of made sense that at some point they would look to other regions to make sure that there isn't sort of these loopholes. I am curious as to how exactly they're going to pull this off. Yeah, I was looking at NVIDIA and I was like, wait, do they sell a lot of chips to the Middle East? But then the direction to China made a lot of sense. And then you have to flip it too. Like, what about stuff coming in from Mexico and Canada that leaves China first and then comes through if you're doing it the opposite direction? How do you monitor and track all of that? Yeah, and it's kind of interesting too. There was a big story just yesterday involving Lam Research and some of the sort of workarounds that some of the secondary companies had used to get their hands on some of their technology and get it over there into Asia. So obviously something that's very complicated and it's not going to be an easy fix. No, and NVIDIA stock is down over 2.5%, so right around session lows. Also, do you know what Saturday is? No. Okay, it's June 1st. Okay. It is the start of hurricane season. Okay. And this is a humongous deal because the storms that we're seeing here in the U.S. are just becoming worse and worse. And this year's hurricane season could actually be, quote, extraordinary. They're forecasting 17 to 25 storms could become named tropical cyclones. 8 to 13 could develop into hurricanes, which means winds of at least 74 miles an hour. And 4 to 7 of those could turn into major hurricanes with winds of at least 111 miles per hour. And that starts June 1st. One of the many challenges facing the insurance sector, then you add on AI and cybersecurity.
According to Politico, Biden secretly gave Ukraine permission to strike inside Russia with U.S. weapons.
On set. Bruce, you have a really big business in the U.S. too. I know you're Lloyd's of London, but you're also like Lloyd's of London in the U.S., right? I mean,
so 50% of our business comes from the U.S.
So how do you manage climate change? What do you do when the storms are unpredictable, they come at different times, and they are catastrophic?
Well, so as a basic premise, insurance has a chance to reprice and restructure annually because people buy one-year policies. And we take in a new set of data each year and we add it to a long data set. And so if risks are linear, it's reasonably easy for us to adjust our models and continue to provide the insurance. If something exponential is happening, then the risk is that we're behind the curve all of the time, and that is potentially what is happening with climate change. So 25% of our capital is tied up in supporting natural catastrophe risks around the world, a big part of that in the United States, where the values are clearly very high. And so we worry a lot about these issues, because it's not just a question of whether insurance is available. It's got to be affordable. Otherwise, people don't buy it. So there needs to be a partnership between government, essentially, and regulators to make sure there's enough resilience in the economy that the losses we're protecting against are unexpected, because the model breaks down if the loss is expected.
But I am curious, I mean, when you talk to your members, I mean, we've already seen insurance companies themselves pull back in certain markets. We've seen the reinsurers pull back. I mean, to a certain degree, there are certain parts of this country now that are completely dependent on the government and regulators to either provide their insurance or at least to subsidize it pretty heavily here. Is that actually something that works in your business model, or is that something that's going to be completely separate?
No, well, governments, we do need to partner with governments in many cases, particularly around systemic kinds of risks, which I think climate would be one, cyber would be another. The risks are just too big for the insurance industry alone to support. But the real issue we need is behavioral change. You know, people need to build in different places. They need to build with greater resiliency. Most building regulations are pretty tough in the United States, particularly in hurricane-affected areas, for instance, or natural catastrophe-affected areas. But what's happening is places that didn't used to be natural catastrophe-affected areas are now experiencing these things. Germany is quite a good example of this. Nobody thought of Germany as a natural catastrophe environment, but they now regularly have extraordinary flooding and hailstorms through a given season.
I am curious, I mean, outside of weather and climate change issues, there are a lot of other issues swirling around here. I think we were just talking during the commercial break here about the advent of AI, some of these new technologies here. This in and of itself has become an insurance risk.
Yes, so we're on both sides of the ledger. We can use AI to be smarter about the risks that we underwrite, but equally AI is going to be used by bad actors to break down the security defenses of our customers, and that will result in greater claims. And so we need to begin to understand this and how we can support our customers going through that. But interestingly, so the first ever cyber insurance policy was underwritten at Lloyd's in 1999. So the industry for insurance is only 25 years old. And in the beginning, people described it as a bit like a homeowner's policy, where you could leave the front door open and you still had to pay the claim. And a bit like you wouldn't expect to get homeowners cover today if you don't have a burglar alarm or mortise locks on your windows. So we're beginning to have conversations with our customers about how they mitigate against these cyber threats. And of course, the value of doing that is to build resilience in the overall economy against the risk of cyber attack.
What's your relationship like with your reinsurers to then help your customers in terms of these threats?
Well, so, we lay off some of our risk, which is where the reinsurance comes in. We actually do reinsurance ourselves for other insurance companies too. So this is about sharing risk in order to be able to provide meaningful amounts of cover when a disaster happens.
Where in that process do you feel is the biggest gap between the pricing that you need to mitigate your risk versus the pricing that customers, whether it be homeowners or a company, can afford to pay? Where is that gap the largest?
Well, it develops in different ways around different risks. than whether their inventory burns or their buildings are knocked down. So what we've got to do is innovate around the changing risk landscape.
All right. Well, fascinating stuff here. I really appreciate you stopping by today. Bruce Carnegie-Brown there, chairman of Lloyd's of London. Now, we do want to go back, of course, to that breaking news from a little while ago. This involving chip makers. NVIDIA shares down about 3% right now on the back of a report that the U.S. is now looking to rein in chip sales to the Middle East. Joining us right now, the co-host of Bloomberg's Balance of Power. Kelly, this kind of came out of the blue, or did it? I mean, what more do we know about this?
Well, we know that the Biden administration is very focused on artificial intelligence and the chips that power them, and the concern that they want to make sure that it doesn't get into the hands of adversaries like China, which is why we have seen put in place a number of export restrictions specifically as to what could go to China. But also back in October, I would remind everyone, the Commerce Department did put export restrictions on chips to the Middle East as well. So to a certain extent, concern around this region is not new. What this news is, though, is essentially that within the last several weeks, according to our reporting, officials have delayed or not responded to license applications submitted by companies like NVIDIA and AMD in the last several weeks, specifically for large-scale AI accelerator shipments. That essentially, the AI accelerators are the things you and the like. The concern here really seems to be on these national security grounds, and why they are conducting this review is the way in which sending large-scale shipments to the Middle East, though it's not exactly clear what large-scale is defined as here, could be a way for China to get around the restrictions that the U.S. has put into place and access these chips and data centers to develop their own technology. And that technology getting into the hands of, say, the Chinese military is what the U.S. is really looking to avoid, which is why we are potentially seeing here an expansion of these restrictions that these companies are going to have to be contending with.
Kaylee, how far along are these discussions, and how do they expect to track all of this?
It's really complicated, Alex, as far as how far into these discussions we actually are. We know the review is underway. What is unclear is just how long this review might take. That timeline right now is not known, but obviously, as we have gotten reporting from these sources, that this has been something happening over the course of the last several weeks, that we have started to see a change in behavior in actually granting of these licenses and issuing them, that this is active and underway as we speak. As for the tracking all of this, this is where this gets incredibly complicated, not just for the government if you were trying to administer these regulations and make sure no one is in violation of them, but of course for the companies. We have seen NVIDIA already dealing with this in terms of what chips can and cannot be sent to China. There has been a lot of talk about the workarounds or the way in which they could develop some chips that are less advanced in terms of the actual nanometers than others and making made for China type chips. This gets very complicated, and a lot of companies are kind of caught in the middle of it.
I want to pivot, Kelly, to another story that also just broke, and this has to do with the never-ending saga involving TikTok. This time, Snap getting dragged into it, and the headline is basically that TikTok is preparing a U.S. copy of the app's core algorithm. What is this about?
Yeah, this is reporting from Reuters, and I would just remind our audience, Romaine, that the U.S. has passed legislation. It's been signed into law by President Biden that within the course of a year, less now, TikTok would need to divest, or ByteDance specifically, its Chinese over, would need to divest the U.S. arm of TikTok or risk being banned in the United States. There has been a lot of question around that potential divestiture, which TikTok and ByteDance do not want to do. They've, in fact, sued the U.S. government over this issue earlier this month. The question of what would happen to the algorithm, even if the company were to spin off TikTok US. What Reuters is reporting is that they are working on a clone of that recommendation algorithm that could result in a version that operates independently of its Chinese parent. So essentially, this may be a way to try to satisfy lawmakers who are also very concerned about the national security implications of this platform and the way in which data could be shared with the Chinese Communist Party, that if this algorithm were operating independently in the U.S., maybe it is a workaround of those concerns, but of course there already is law out there, and that's what is a complicating factor.
Kaylee, we really appreciate it. Thanks for jumping on. Bloomberg's Kaylee Lyons joining us there. Should point out tech around the lows of the session, the NASDAQ down by a full percentage point. Coming up, we're going to count you down to the closing bells. Jeff Kleintop, Chief Global Investment Strategist at Charles Schwab, will be joining us. This is The Close on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
The biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? It's just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
Nvidia shares extend decline to 4.1%.
It creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg.
So market on close imbalance for the S&P 500 at 476 million to the sell side. Market on close imbalance, NASDAQ 100, 307 million to the sell side. The Dow Jones 30, 199 million to the sell side. And the Magnificent 7, 230 million to the sell side.
Down to the close. Romaine Bostic alongside Alex Steele. With about 10 minutes until we get to those closing bells here, and stocks right now at session lows. Of course, the biggest drag right now in the tech space with the NASDAQ down more than 1%.
Yep, and you can really blame NVIDIA for that. It was already the worst performer, with Salesforce also down by over 20%, but now NVIDIA catching a bit to the downside, also down over 4%, so really picking up that steam. The Russell 2000, though, outperforming all across the board. Yes, off the highs. Yes, rolling over as NVIDIA rolls over, but nonetheless eking out that gain of 0.7%. That's not a world where the consumer is doing poorly if the Russell 2000 is up and outperforming.
Yeah, giving back some of the gains, more than half the gains here on the day, but I guess you did have some encouraging spots out of some of the retail earnings that we got over the last 24 hours. Maybe, just maybe, that'll be ratified when we get that personal income and spending data and inflation data tomorrow. We had a chance to catch up with Kate Moore a little bit earlier. She's actually staying positive on stocks. Here's why.
I think we're going to have a good, strong end of this year, even if we have some turbulence over the course of the summer. So for those people who are worried about headlines and worried about the election, I would say don't sit this out. You know, in every presidential election year since 1944, the S&P has ended up at the end of the year.
And that was Kate Moore over at BlackRock, who helped kick us off to the close just about an hour ago. And now, to take us to those closing bells, Jeff Kleintop, Chief Global Investment Strategist over at Charles Schwab. All right, Jeff, I mean, this is a market that's been, I guess, in a little bit of a stasis since hitting those record highs. And I think everyone's sort of wondering when that reset comes for the next leg of this bull market. Are you as constructive?
Total money market fund assets rose by $3.8 billion to $6.07 trillion for the week ended May 29th, according to ICI.
lot of investors have been focused on, but you've got improving economic momentum, a manufacturing recovery that favors them, and reasonable valuations. And now you've actually got earnings growth in the second half of the year likely to outpace that of the U.S. And I'd add a kicker to that, and that's the euro maybe showing some signs of strength. Actually, this month is the first month we've seen the euro up versus the dollar. Might be more of that to come.
For U.S. investors who maybe believe in what you're saying there, Jeff, and you're not the first to sort of make that pitch here, do you do that by investing directly in European companies, or do you look for U.S.-based companies that maybe have large European exposure?
I think you actually want those European companies themselves. You know, one of the big differences in the relative performance of these global companies that truly have sales all over the map, wherever they're headquartered, is that the investor base is quite different. 80% of the investors in European equities are based in Europe. 80% of the investors in U.S. equities are based here in the U.S., and their outlooks are very different, and their optimism is very different. And valuations in the U.S. reflect that, and the more pessimistic valuations in Europe reflect that. So I actually want to invest in those equities traded overseas because their valuations are low, and there's a lot of pessimism because of the war, because of the recession last year. All that's turning around. So I think you get the PE boost to investing directly in those European equities.
Jeff, I love that you're like, we're 7 minutes into the close in U.S. trading, and you're like, go European equities. But I have heard this argument for years, and it has yet to really pan out.
So here's why it's different this time. Careful when anyone says that, right? Actually, since the bull market began,
Biden partially lifts the ban on Ukraine using U.S. arms in strikes on Russian territory to defend Kharkiv, according to AP News, citing U.S. officials.
I think few people recognize this, but the MSCI EMU index, that's the Eurozone index, is outperforming the U.S. even on a dollar basis by 20 percentage points. So many investors are missing that, focusing on NVIDIA and so many other high flyers in the MAG 7 and, well, maybe now the MAG 1. I don't know. But that, I think, is distracting them from this actual underlying performance we're seeing outside the U.S. that's now stretched to a year and a half.
So how much of it, though, also has to do with the central bank most likely cutting next week? Like, does that feed into this process for you at all? Because we don't know what's going to happen after that. Whereas with the Fed, we don't know when they'll cut, but when they do, we can expect an actual cutting cycle.
Yeah, Alex, you're right. It's still a bit of a mystery what happens after the June rate cut from the ECB, but markets are beginning to price in a series of rate cuts. You know, one of the things that's standing out, and you mentioned the Russell 2000 performing well today, but we've seen small cap stocks in Europe outperform all quarter. In fact, they're outperforming large caps by 3 or 4 percentage points, really beginning to price in easier financial conditions in the second half of this year on a series of rate cuts, not just a one and done from the ECB.
All right, Jeff, I'm going to steer you one way or another back here to the U.S. here. Is there anything you like here in the U.S. equity market?
Yeah, I mean, I think financials look pretty good here. It's our favorite sector, and you're seeing this outlook for still a resilient consumer, a relatively resilient labor market. That means that credit losses are not going to be that significant. I think as we see the yield curve get more normally shaped, I think that's all good news for the banking sector. And if you take a look at capital market activity, that's improving as well. IPOs and M&A activity. I think all that spells good news for the financial sector. One, I think also investors have been overlooking for the last year or so, really just focused on tech.
All right, so if this gets to a point here, Jeff, where we do start to see, and again, coming back here into the U.S., where we do start to see maybe a little bit more of an embrace of things outside of just tech here, I am curious about the cyclical case here, the small cap case, and we've seen that kind of fits and starts over the last, 8 or 9 months, where people have tried to sort of bid up these stocks, and then you get some economic data point, or the Fed spooks them or something. Is there any sort of, argument to be made that we can see a little bit more resiliency in some of those names?
I think it depends on interest rates. They are very rate sensitive. They borrow simply much more than large cap stocks. Large cap stocks actually make money on interest rates because they have so much cash. Generally, smaller caps are borrowers. So we need to see rates begin to come down. We've been in a high rate environment, particularly for five years plus for a while now. As that maybe begins to come down late this year and into next year, that's the environment we need to really see small caps begin to perform well, as they are just so rate sensitive. I think you combine that with the backdrop of an improving economic picture outside the U.S. Remember, we were in a recession last year in Europe and the UK and a number of other places. That's now improving. So the cyclical upswing in earnings combined with easier financial conditions makes that case for both international stocks and small caps.
All right, Jeff, always love talking to you here. Jeff Kleintop, Chief Global Investment Strategist at Charles Schwab, helping us count down to those closing bells. We still got a little ways till we get there, Alex, just about 3 minutes or so here. Stocks on the back foot here, but this has really kind of been a tale of two cities today, right? We talk about the big downdraft that we saw in software stocks and then the big uptick that we saw in a lot of those retail stocks, which was kind of surprising to me, particularly given that some of those retailers, like Best Buy, did I miss something?
Yeah, and also the inability for Kohl's to also perform too.
Yeah.
When they were supposed to be doing relatively well. They have Sephora, their Amazon return packages.
Yeah.
They have some designers like Tommy Hilfiger, for example, and that was very much a surprise.
But that gets to a question too. Are they too sort of disparate? I mean, we talk about which retailers are doing well. Some of them are more single brand type retailers that we've talked a lot about. So I don't know if maybe that's also in the mix, and maybe we learn a little bit more out of that tonight. We do get one of the big department stores in Nordstrom.
Yep, Nordstrom, more high end though for sure, but then Gap. But also I was talking to Mary Ross Gilbert of Bloomberg Intelligence. Tough comps for Ross, but for Kohl's, but they are executing and their plan is working. It's just not working to the fullest extent per se in a tough environment.
We're also going to get Ulta Beauty, so a read on what is it? Invest, right? Splash your face. What did you call it? Invest in your face there.
Splash
and Costco as well. Gold bar is apparently going to lift that stock potentially as we move closer to those bells. Stick with us. We're going to take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast with Carol Massar and Tim Stenovic as we welcome our audiences across all of our Bloomberg platforms. That includes television, radio, and our partnership with YouTube here on a day where we're seeing most stocks here on the back foot, though some resiliency when it comes to retailers.
Yeah, absolutely, right? We've been certainly focusing on, and actually there are going to be a bunch of my gainers, and we'll get to them in just a moment. We've been thinking, though, I'm sure you guys too, just looking at NVIDIA shares down about 3.6%. Again, a story, a Bloomberg exclusive about U.S. reining in AI chip sales to the Middle East by NVIDIA and AMD. AMD actually higher, but NVIDIA, it's just a reminder that geopolitics, again, can get in the way of companies who are trying to do business.
So you're watching the hardware companies. I'm watching the software companies in the S&P 500, and they are just getting crushed today after kind of in sympathy with Salesforce because of the company projecting the lowest quarterly sales growth in history. A little preview of one of my decliners, but that affecting, Alex, other members of the software industry.
Oh, deep tease, deep tease. I just want to point out, too, though, that I know we can point to Salesforce and we can point to NVIDIA and tech trading heavy, but the whole commodity complex was also taken down as well. As I wonder if we're just in a more of a broader risk-off move today, particularly if you look at that bid in the bond market.
You are seeing a bid, though, come into cryptocurrencies here on this day. The VIX slightly lower on the day, back down around that 14 level here. And then when we talk about the cross-asset space here, yields, maybe that's providing a little bit of tailwind for some stocks here, but we're still going to get some red across the screen for all of the major indices, sans some of the small cap and mid cap names. The Dow Jones Industrial Average lower by more than 300 points on the day, roughly about a drop of 0.9%. The S&P down about 30 points or so, down about 0.6%, while the NASDAQ Composite as well as the NASDAQ 100 each down by about 1.1% here on the day. But if you are looking for green on your screen, you will find it in that small cap, mid cap, and cyclical space. Dow Transport's up 1.3%. S&P 400 mid caps up 1%, and the Russell 2000 up 20 points or 1% on the day.
Yeah, interesting too to see the Russell 2000 small caps actually outperforming the other major indices, if you will, up about 1%. Having said that, though, Alex, if you go to the S&P 500, you've got most names in the index actually showing that they are higher for the day. 362 to the upside, 140 to the downside, 1 unchanged.
Yeah, taking a look at IMAP here, super interesting what we're looking at. We're looking at communication services and information technology. Both of those are the two sectors in the red, particularly tech off over 2%. But that's really the Mag 7 and a Salesforce effect. On the upside, you have real estate. Okay, as yields come down, you're going to have real estate do well, and utilities the same deal. But then materials, industrials, and financials also doing relatively well, which is impressive considering that overall commodity sector is selling off.
All right, guys, let's get to some of the individual gainers, if I may. HPQ, Hewlett-Packard, HP, up about 17% in today's session. It's your number one gainer in the S&P 500 today. moving the most intraday ever, highest level in about 2 years after net 2Q revenue from the company beat the average analyst estimate. This resulted in a bunch of analysts on the street, Citi and Morgan, sparking price target hikes by them, and they pointed to HP's robust PC segment. So essentially, they just raised their price target on the company. Hey, Best Buy, Romain, you mentioned the retailers, some outperformance there. Best Buy up about 13% in today's session. The company's CEO saying during the retailer's earnings call that same-store sales for May expected to be better than its guidance for the fiscal second quarter, and then for the first quarter, it reported better than expected profitability, even as sales woes deepened and consumers remained on the sidelines with some of their electronic purchases, but nonetheless, upbeat outlook, and Best Buy up about 13%. Your number 2 gainer in the S&P 500. Foot Locker, another retailer, up about...
When was the last time that happened?
Which part?
The number 2 gainer in the S&P.
I know, it's like unusual names, as you said, retail really dominating. Foot Locker, again, 15% to the upside, up 31% at its highs today. This as the company reported first quarter adjusted earnings per share beat the average analyst estimate. Comp sales seen as better than investors feared. And I got to do one more. Birkenstock up almost 12% in today's session. Its full year revenue forecast topping expectations. So, yeah.
Do you wear Birkenstocks? Because Carol has very fancy shoes, so this is a good indicator for me.
I do not.
I knew it. I knew she didn't. Okay, this means something to me. Anyway.
I love you.
All right, hard pivot from Birkenstock to the cloud. Let's talk about Salesforce, because this was the big one to watch.
A lot of people at Salesforce wear Birkenstocks.
Maybe. Let's talk a little bit about...
What does that even mean?
I don't know.
All right.
Tech people.
Down 20% today. No laughing matter, as it slid by the most in close to 2 decades. You got to go all the way back to July of 2004 to find a day where we saw Salesforce fall this much in a single day. It projected the slowest quarterly sales growth in its history. It renewed concerns that the company will be left behind in the AI boom. We spoke to Bloomberg Intelligence's Anurag Rana a little earlier in our program about this decline, and what he basically said is that you have a lot of companies shifting their budgets, shifting their tech budgets. Instead of buying software and services right now, they're taking that money and they're buying chips and servers. So think NVIDIA and Dell being the beneficiaries rather than Salesforce, and perhaps a company like ServiceNow, which brings me to my next decliner. ServiceNow falling in sympathy with what happened with Salesforce today. Shares of ServiceNow falling by 12%. This after Salesforce gave that weak outlook, and we saw the entire sector just move lower. Also, Kohl's down 23%. The company had its worst day in its history as a publicly traded company. You got to go back to 1992 when that company went public. This after it slashed its guidance for the full year. It reported first quarter results that missed on pretty much every metric. Comp sales for the quarter fell 4.4%. It was the 9th consecutive decline. Analysts had expected only a 1.7% drop. Kohl's offered deep discounts in the period. The company did say, though, that sales of clearance items actually declined, leading to a miss on those comp sales.
Well, where you're seeing the safety big guys today is definitely within the bond market. Not the dollar, but the bond market. You have yields moving lower pretty much across the curve. A nice bid into the belly in particular. Yes, you had that second read first quarter GDP. Man, that's hard. That came in a little lighter. You also had personal consumption a little lighter than expected, but still pretty solid growth. And guys, this is all, of course, ahead of that PCE data tomorrow that I really hope will finally be a catalyst, or at least directional for this market.
Yeah, maybe give us a little bit more insights here into what's going on with the Fed. Meanwhile, we continue to get earnings, awaiting quite a few crossing the wire. NetApp already out. Those shares up 3%, and now we're getting Dell crossing the wire right now. And, well, the numbers, they look good. The company, I'm going to start here with the forecast going forward. The company is saying that for the first quarter, this is for the first quarter, the numbers just passed. Net revenue coming in at $9.23 billion. The street was looking for roughly about $9.06 billion. Adjusted EPS also slightly beating at 1.27. The street was looking for $1.23 here. Total net revenue coming in $22.24 billion. The street was looking for 21.6 here. So overall, it looks like a beat on all the key metrics here, but as you can see, the share reaction to the downside down 10%.
Yeah, that's pretty significant. Keep in mind that this one has been on such a tremendous run up, 123% year to date. So it does look like there's some disappointment. The Infrastructure Solutions Group, $9.23 billion. You mentioned that. That's up 22% year over year, beating the estimate. Servers, obviously a big thing. We've heard a lot of conversations, if you will, from Dell about the build of AI, the build out and how companies are doing it, not up in the cloud, but they're going to want to be doing it on premise is what they call it. Servers and networking, $5.47 billion, folks. That's a beat. Storage revenue, that's a little light, $376 billion versus the estimate of $3.98 billion. And adjusted EPS, $1.27 versus $1.31 year over year. The estimate was $1.123, so beat, but down from the year before. Stock down 9%, so we're going to have to dig through a little bit to get some of the commentary to find out why there's some disappointment here.
Look, total net revenue also coming in above estimates at $22.24 billion, beating estimates of $21.62. The Client Solutions Group came in above estimates at $11.97 billion. Commercial revenue at $10.15 above estimates. Consumer revenue did come in a little light, but that's a small portion of the company's revenue these days at $1.81 billion versus estimates of $2.06 billion, Alex.
Yeah, just looking at some of the commentary, you had the chief financial officer in the press release talking about how they're really well positioned to take on AI growth, saying that revenue is up 6% in the servers and networking revenue up 42%. They have strong cash flow. They can execute. So clearly, there must be a large expectation game here playing into that decline from Dell down about 9%. But again, as Carol mentioned, it had just skyrocketed after last quarter as everyone kind of remembered that they were an AI play.
Yeah, and there was some easing of some of the GPUs coming from NVIDIA in terms of the AI build-out. So it looks like they are being able to sell servers. Real quickly, Nordstrom, folks, if I just want to bring it up, they are first quarter total revenue. It's a slight beat. First quarter adjusted loss per share, 24 cents versus an estimated loss of 7.2 cents. Just a quick check on the stock, and it's down about 2.7% in the aftermarket. A lot of this one is shorted, so we'll continue to track that. All right, guys, that is a wrap. Our cross-platform, radio, TV, YouTube, Bloomberg Originals, Beyond the Bell. We will see you again, same time, same place, tomorrow.
All right, don't go anywhere. A slew of earnings out there right now and a slew of big movers really moving here in after-hours trading. We'll get to them when we come back after the break, right here on The Close on Bloomberg.
I think I was around so many powerful people my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios. And, any given day it would be the head of a studio and, just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
Welcome back to The Close. Romaine Bostic here, joined right now by Gina Martin Adams, a chief equity strategist at Bloomberg Intelligence here, Beyond the Bell.
Thanks, Romaine. It's been a really interesting day in markets. If we look at what happened in cross assets, obviously the S&P 500 struggled, but some really mixed results inside the equity market. The NASDAQ certainly leading declines, while many of the rest of the sectors and small caps even higher on the day. So some mixed results for equities. 10-year rallying on a slightly weaker than expected GDP report, and then the dollar down a little bit of an edge. So really the equities, the bulk of the excitement on this day, where we have plenty of earnings to chew on over the course of the next few minutes.
And it was interesting, too. We started off the day with a big drag from Salesforce earlier here in the day, a drop of 20% here in the cash session, one of the worst days on record, and that really dragged down everything in the software space. Even Microsoft got hit, down 3% here on the day, and UiPath, a bit of an idiosyncratic story with the loss of their CEO, a 34% drop, worst ever for that company in its short history as a public company. Meanwhile, there was a lot of talk today about what was going on in the retail space, and Kohl's really representative of the downside of that, down about 23%, though we should point out some of the other peers in that space actually had pretty good days. But you go back to what's been happening in the technology space, and that is our top story here, and that top story is about the return of PC demand. We saw this yesterday with HP Inc. rising, as a lot of folks now apparently are talking about a new cycle in the PC demand era, and not on the consumer side. A lot of this will be with companies refreshing their upcycle here, and apparently Dell also benefiting from that. We saw that in the numbers just released after just a few minutes ago here. Despite the fact that those shares are down here on the day, the company is giving a little bit of hope here that the resurgence in the PC space and in the service space might actually benefit Dell as well. Gina?
Let's get more insight on the latest results from Dell. Joining us now is Woo-Jin Ho, Bloomberg Intelligence Senior Analyst. Woo-Jin, tell us, what's your first reaction on this release today?
Hey, Gina, how are you? So, look, I think expectations heading into the print were pretty high, largely because of the AI server expectations. Looks like the stock is pulling back off of the results. I would wait for guidance before I make an official comment on where I think the business is going forward.
Well, can you give us, Woo-Jin, sort of your general guidance here? Because when we were talking a little while ago, it was all this idea here that, okay, there is an AI story here, a legitimate one, and this is going to have some sort of material benefit, maybe long term. Is there a reason why that didn't show up in this earnings report, and do you expect it could potentially show up in subsequent earnings reports?
Yeah, so it could be a partially timing issue as well in terms of when the deal closes. I will tell you the server and networking business actually beat by about 10%, beat consensus by about 10%. Now there is a fairly large Tesla deal that's out there right now, and that's supposed to run the course of the year. So that may be reflected in the guidance, which they only give on the call.
Speaking of guidance, talk to us about the outlook that currently is embedded in the market or in Dell's recent guidance. What is in the outlook that you think is most vulnerable or even presents a greater opportunity for some upside?
Sure. So everyone has their focus on the server and networking guidance right now. In terms of the ISG group, the Infrastructure Solutions Group, they guided to mid-teens growth last quarter for the year. Embedded in that is 25% server and networking growth for people to feel good about the AI server business. That 25% server and networking growth has to be better than 25%.
Taking a look at the market wrap for today's session, Wall Street traders sold stocks and brought bonds after the latest round of economic data indicated a slowing in momentum. Just 24 hours before the release of the Federal Reserve's preferred price gauge, a report showed that the United States grew at a slower pace, with both spending and inflation falling. Economic cooling could strengthen the case for the Fed to begin lowering interest rates this year. However, this could imply weaker consumption, which would be a source of concern for corporate America. The S&P 500 fell to around 5,235. The NASDAQ 100 dropped to 1%. U.S. officials have slowed the issuance of licenses to chip makers such as NVIDIA and Advanced Micro Devices for large-scale AI accelerator shipments to the Middle East, according to people familiar with the situation. Salesforce fell 20% after a downbeat forecast.
you do
Treasury
not see
2-year yields
a
fell 5
premium
basis points to
for that AI feature.
4.92%,
It was
and the
still
dollar
a
fell.
$12.99 device. And I suspect that's going to be the case for the PC market as well. Now, the one thing I will say, more so than AI, I do think that there is going to be a very strong Windows upgrade cycle coming into the second half of this year, and even stronger in 2025. And I think that's one of the reasons why HP was up strong this today's trading day. And I wouldn't be surprised if Dell would be catching that tailwind as well.
Woojin, can you talk to us a little bit about what these companies are doing with their cash? It was obviously a feature of the rest of the tech earnings season to talk about cash utilization, where they were going to deploy capital, as well as ultimately dividend and buyback announcements, and that's been notably missing in this segment. Are we talking about a big R&D cycle coming here? What are they doing with their capital?
Sure. So in terms of Dell, you have to keep in mind that these guys have been cash flow positive not too long ago, primarily because of their spin-off of VMware. They're going to be buying back or returning about 60-70% of that cash back to shareholders, and that they're going to be consistent, especially as revenues start to grow. As the AR storage starts to pick up steam, you should start seeing share buybacks as well as dividends coming from Dell.
All right, Woojin Ho over at Bloomberg Intelligence. A closer look at Dell. Those shares all over the map. At last check here, down about 12 to 13%. Actually, one of the biggest decliners in the post-market trade. Some other big movers out there on the back of earnings as well, including Costco, Ulta, and Gap. Emily Rafael and Abigail Doolittle standing by with a closer look at those names.
Well, Romaine, we are looking at a decline here for Costco right now, down about 1%. Earnings just out a moment ago, so I'm still moving through them. But it seems to be that the weakness here is the fact that the comp came in at 6% versus the estimate of 5.51%, with the stock up more than 60% over the last 12 months. Just not enough. A similar deal for their earnings. They put up $3.78, a beat above the $3.70, but still not a huge beat. We'll also be looking for color on the membership fees. What makes this decline interesting, we've had so much color on consumers going toward discount brands, and that's one reason the stock has been up so much over the last year, as consumers trying to find those bargains, but simply not playing out in these numbers, and we'll of course be digging into them more. Now let's take a look at a big winner, because the Gap, up sharply in the post-market, they put up a massive beat here. So the beat that they put up was 41 cents. Folks had been expecting a 13-cent, up 18%. Options really getting this right, expecting a 12% move up or down. Clearly to the upside. The Old Navy comp coming in at 3% versus the comp at 2.5%. The gross margin, very positive, Romaine, 41.2% versus the expectation of 38.5%. We'll have more color on that as well, Romaine. You can see a really nice gain here. Emily, what are you taking a look at?
I'm looking at Ulta, and it was a mixed earnings report for the beauty